on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Welcome back to RoxomTV. My name is Walker America. I am here with you every Tuesday from 1 p.m. to 4 p.m. Eastern Standard Time. The price of Bitcoin is $81,338 infinitely printable Federal Reserve notes per coin, and we've got a great show ahead of us today. We've got Guy Swann, the man, the myth, the voice, joining us here for the first hour. We'll have Joe Consorti. After that, we'll have a whole bunch more Bitcoin and world news stories here for you today. Let's go ahead and get into it while we wait for Guy to join, because Trump, there's always more news with this man as the president. That makes sense. But the trade war the U.S. and Europe thought they'd put to bed last summer is apparently wide awake, and it brought a 25% tariff with it. The United States is raising duties on cars and trucks imported from the European Union from 15% rate that was negotiated in a trade deal with the European Commission just last July, all the way up to 25%. And the justification, delivered in a Truth Social post, was that the EU has been, quote, not complying with our fully agreed to trade deal. The European Commission fired back, saying it has implemented every single commitment it made and that the American claim is simply not accurate. So at this point, somebody is lying and both sides are very confident it isn't them. Now, the country with the most to lose here is Germany, and it isn't particularly close, because the German auto industry analysts estimate the new tariff rate will cost Germany alone 15 billion euros annually, with BMW, Mercedes-Benz, and Volkswagen all staring directly into the blast radius. Brussels said it's already preparing retaliatory options if the tariffs take effect, while simultaneously trying to get fresh trade talks going with Washington, which is essentially loading the cannon with one hand and knocking on the door with the other. Now, boy, with this whole tariff saga, it just feels like deja vu all over again each time. What can you say? I mean, on the one hand, tariffs ultimately, trickle down, and who pays the price for these? Well, it ends up being consumers, right? Anybody who's trying to do business right now in this environment knows that you end up passing along those costs to the end customer at the end of the day. And this is something that we see also, from a shipping perspective now, with how much rates of shipping have increased recently. All these things end up getting passed along to the consumer. Now, you can make a lot of arguments on behalf of tariffs, right? You can say, well, we need to stop getting taken advantage of by these other countries, et cetera, et cetera. And I'm all for that. I'm just generally not all for tariffs as a means of doing that, simply because, again, those are free market distortions, right? They're costs that end up getting passed along to the end customer. They end up just making everything a little bit more expensive than it already was, thanks to the never-ending money printing that our esteemed central bankers engage in. And I think tariffs are something that sound good in theory, but then in practice, what do? Well, they create just an incredibly inefficient business environment. You're adding all these different types of friction into the mix, and there just are better ways to deal with this, right? Because again, at the end of the day, who ends up paying the cost for these? Well, German cars are going to cost more. You can say that the car companies are going to be paying the tariff, and they are, but they're not going to operate at a loss just because there are tariffs. So what are they going to do? They're going to raise their prices. This is what happens. And this is just generally the case with all forms of government intervention. They sound kind of okay in theory, except for the socialist and communist ones, which don't even sound good in theory, unless you have a sub-80 IQ. But then in reality, what happens is that these things just lead to market distortions. They are aberrations in anything resembling a free market. But of course, we don't have a truly free market because nowhere is there a free market for money when you have a central bank involved, right? If you're setting the price of money, you're setting the interest rate, you're setting the amount of money that is new money that is brought into existence. You can't possibly have a free market. So everything, it's kind of trickle down monetary policy, really. But thank goodness we have a free market in Bitcoin, at least something that can hopefully bring the rest of markets closer to reality by at least having a free market in money itself. We'll be following these tariffs closely. I know for anybody who is operating a business, you know exactly what I'm talking about in terms of passing along these costs to consumers. The other thing is that it just adds so much kind of compliance headache to everything that you do. Now you need to have more people who, instead of being focused on making sales or delivering quality products and services for customers, are just trying to deal with how to get around or be compliant with whatever the changing tariff du jour happens to be. And that's the thing. So much of this ends up being posturing or kind of a little bit of a game of chicken, right? And you can say, well, it's a negotiating tactic for Trump. Okay, fine. The reality is that everybody who's running a business knows that this just adds headache. It adds cost, both direct and indirect. And it ultimately just makes you less able to do your job effectively. But hey, maybe it's 5D chess. Maybe the tariffs are in fact a good idea, and I'm just totally wrong. But my stance continues to be that tariffs are a free market distortion. I'd like to see them getting rid of all over the world. But granted, you can also make the argument, playing devil's advocate to myself here, that, okay, if one country is imposing tariffs, then, of course, the other one needs to respond in kind. And if you don't, you're just being at a disadvantage. Let's see. Ultimately, who pays the price for all of the political maneuvering and economic maneuvering done by the political elites? Well, it's you and me, right? It's the people buying things at the end of the day. The people producing them are passing along those costs to us, and we get to suck it up and take it. Coinbase took a hard look at its workforce, speaking of sucking it up and taking it this week, and decided that roughly 700 people were, let's say, surplus to requirements. That's about 14% of the company getting shown the door. CEO Brian Armstrong told his employees, quote, "We're currently in a down market and need to adjust our cost structure. But here's the thing, this isn't just a layoff story, it is a corporate makeover." Because Coinbase is flattening its entire structure to a maximum of 5 management layers and rebuilding around smaller AI native teams, including something they're calling one-person pods, where AI agents handle the engineering and product work that used to take an entire team of humans. And to be clear, Coinbase doesn't appear to be broke. Their treasury looks like it's in great shape. The company is choosing to reposition itself for stablecoins, prediction markets, and the AI era, rather than waiting around to be forced into it later. Wall Street, predictably, is eating it up with a spoon. Coinbase is trading around $203, up over 6% on the day, adding nearly $12 a share, with investors reading this as a confident reset rather than a panic move. And Coinbase is hardly alone in this dance. Meta, Amazon, Oracle, and Salesforce have all trimmed headcount in recent months while shoveling money into AI like it's going out of style. The pattern is everywhere now. Cut the humans, deploy the algorithms and the bots, scale your output with fewer people, and let the market reward you for your efficiency gains. That appears to be the new playbook for tech, and it's quietly shaping what the next phase of both industries is actually going to look like. I think it's also important to point out, Block, Jack Dorsey's Block, was very much sort of ahead of the curve on this. I think Jack Dorsey wrote a really excellent kind of public or open letter. It was a letter to his employees, but then published it openly about exactly his thoughts behind this and kind of getting ahead of it. They slashed, I believe it was 40% of their workforce. So quite a large move. And I think you will see this happening across the board. You already are from the biggest players, because they kind of see the writing on the wall. Also, they see, similar with Block, similar with Coinbase, with these moves, their stock price gets a nice bump on any of these sorts of announcements, right? Because people say, look, cutting costs, getting ready for the AI era, great, they're ahead of the curve, right? Investors tend to like it when you fire a bunch of people, as long as it's not a total panic move. But one thing that I do think is interesting about this that I want to key in on a little bit is Brian Armstrong says, we're currently in a down market and need to adjust our cost structure. Now that's sort of interesting, right? Because really, I mean, yeah, Bitcoin's, it was made a high of 125-ish thousand dollars, right? We're now at let's see, 81,330. We're up, doing pretty well since the start of the war or conflict, whatever you want to call it, in Iran. But I think what he's really he's telling on himself a little bit here, because what's really in a down market, Bitcoin, yeah, it's down a bit, but it's moving back up, and it looks it looks pretty bullish to me right now, right? But what's been in a down market for a lot longer, and what will continue to be, is the whole crypto sphere, right? When Bitcoin gets a sneeze or has a sneeze, it's like the entire crypto market has an axe wound to the head. And this shouldn't surprise anybody. Coinbase is a sort of fair weather Bitcoin friend, right? They talk about Bitcoin when it's sort of convenient, but then they talk about crypto the rest of the time. And if you open up the Coinbase app, which I have not done in a while, since I prefer to use now a Bitcoin-only solution like River, not a sponsor or affiliated, but they do just have a great product. And I like that they're Bitcoin-only and have proof of reserves. That's something that I care about. Coinbase has really put a lot of their eggs in the crypto basket. And so when he's saying, we're currently in a down market and need to adjust our cost structure, you look at the buying volume that's been happening on Bitcoin-only exchanges. River publishes a lot of this data, and it's looked a lot more bullish, right? It's a good time to buy Bitcoin right now. People are buying a lot of Bitcoin. Of course, a lot of people are selling Bitcoin too. That's how a market works. But I think that this is really interesting. I also think that what you've seen, he talks about a little bit, basically focusing on, prediction markets and things like that. I think that really, and you notice this, we've been covering it for months now, this kind of shift that happened basically all at once for Robinhood, for Gemini as well, for Coinbase, for probably, many others. They moved toward offering prediction markets as well, in addition to all the, crypto casino trading on their apps. And I don't think that's just like a chance thing, right? They all are sort of seeing the writing on the wall that the crypto scam, the shitcoin scam, is starting to breathe some of its last breaths. Now, do I think that all of these shitcoins are going to go away? Absolutely not. Like fiat currencies, if people have the ability to print them, they will, right? But you are just continuing to see massive dilution. I mean, with all of the different, meme coin, shit coins on Solana that have made it so easy for anybody, what's that, pump.fun or whatever it is, to just really easily spin up a new shit coin in a couple of minutes. It's like the market has there's tens of thousands or hundreds of thousands of shit coins. Now, there might be millions. I have no idea. There's one Bitcoin, though. There's only one Bitcoin. And I think that people are starting to realize that more and more, right? There's always going to be other shitcoins. There's never going to be another Bitcoin. And I think that these big crypto companies understand this. And that's why, and we've been saying this here in Roxom for months, that's why we've seen such a sort of hard pivot over to just, instead of being a crypto casino, just being an actual casino, just offering prediction markets. Because let's be honest, what is like 90% of the prediction market volume? It's not like it's 90% geopolitical events, right? It's like 90% sports betting, right? Let's just be honest about that. That's fine. Do whatever you want with your money. I don't care what you do with your money. That's your business. But let's just be honest about what this is, right? This is just pure gambling. And you can say, well, prediction markets for geopolitical events do offer us, a good way to actually, crowdsource this data with, actual, economic stakes on the line. People really putting their money where their mouth is, and that's going to give us better data. And it showed us the results of the U.S. election before any of the pollsters got it. All true. It's also true that the majority of the volume is just sports betting, right? And there's a lot of insider activity. That's the case with every market, right? Congress famously loves to insider trade on material non-public information. Nancy Pelosi kind of made her whole fortune off of it. Either that or she's just a really genius trader. She has so much time, apparently, outside of her busy schedule to focus on trading and studying. But again, here's the signal, I think, here, is that we are going to see, on the AI side of things, we're going to continue seeing massive downsizing at all of these large tech companies, right? Regardless of what specific, tech industry they happen to be part of. We're going to see this across the board. It's going to continue. It's probably going to accelerate. What we're also going to see is, I think, more and more of this slow death of the crypto side of things. Again, I don't think that crypto is going away entirely anytime soon, right? There are still plenty of suckers and there are still plenty of insiders who want to create bags and then pump them and then dump them, right? And that's not going to change anytime soon. But I do think that the trajectory of all of these different tokens, shitcoins, meme coins, whatever you want to call them, all of these cryptos is accelerating even faster towards their true value, which is nothing, right? They're all trending to zero against Bitcoin on a long enough time frame. I think that time frame has just been shortened. I think it's been accelerated. I mean, you look at even the performance of the big ones, right? The big crypto blockchains with all their innovation, Ethereum, Solana, these types of things, like they're all struggling, right? Their narratives haven't played out. Now they're also just going to pivot to being, hey, you know what? Okay, we'll just admit it. We're a centralized company. We provide this service. Like, okay, the whole decentralized thing was kind of a LARP because it was, right? Like you look at the Arbitrum hack that we covered here a couple of weeks ago that happened on Ethereum, and the fact that they just, Arbitrum was just able to freeze the hacked funds, right, and send them to another address, right? Like it's DeFi in name only. It's just like drop the D, just Fi. It's cleaner. It is just finance dressed up a little bit. It's just TradFi with a little bit more glitz and a little bit more autism maybe. But at the end of the day, it's basically the same thing. And then take that in contrast to Bitcoin, right? Take that in contrast to Bitcoin companies who are not focusing on how do we print a new token out of thin air and dump it on retail to pump our own bags. No, how do I create actual value for customers? How do I create a product that people really want? How do I create a service that is much better than anything that exists right now? And you're seeing these sorts of things happen. You're seeing what Block has done, right? With their Square terminals, with Cash App. Like they're not only handling the merchant side of the transaction, but they're also handling the customer side of the transaction. Customer with Cash App, merchant side with Square terminals, and turning all of those merchants on to Bitcoin. I mean, that has been, in my mind, I don't know if I can think of a more bullish development for medium of exchange Bitcoin adoption than what Block and Square have been doing in terms of the scale, in terms of how widespread that is, in terms of actually addressing the friction at the point of sale for merchants and customers alike. That's been huge. In that same vein, what Steak and Shake has done as one company, not as a service provider, but as a goods provider, right? And boy, I can tell you, I've only paid in Bitcoin for Steak and Shake since they enabled that, and I have enjoyed those burgers and Frisco melts and tallow fries even more because of it. And we've seen also a ton of other development happening, whether it's Spark, whether it's kind of taking another layer out and look at Cashew, Chami and eCash. Look at Fetty, what they've done. There's all sorts. I don't mean to just, I'm not ignoring all these things. I bring up Square, though, specifically because that's such an incredible product and service that they provide to both merchants and to consumers to be able to remove friction and create a better experience for merchants and customers alike. That's really kind of this incredible thing here, is that you have this ability now for people to just at the tap of a button be able to either pay in Bitcoin or pay in fiat and use Bitcoin rails and be none the wiser and pay less fees for it. Like, this is just a better experience. You don't see this stuff happening on the crypto side, right? You don't see this sort of stuff happening over there in the, blockchain, not Bitcoin space. What you see happening is greater proliferation of just outright scams. What you see is more and more pump and dumps. What you see is constantly changing narratives from the big, blockchains. And ultimately you see them all sort of going to their marginal cost of production, which is zero. They're all trending to zero against Bitcoin. And that is, that trend is not going to reverse. I hate to break it to the crypto folks, but hey, if you want to go ahead and trade shitcoins, be my guest. I'm going to keep dollar cost averaging into Bitcoin, smash buying when I have some extra fiat, and trying to create some value in the world and take care of my family all along the way. We're going to go to a quick break here. When we come back, I hope that we will have Guy Swann, the man, the myth, the legend, the voice of Bitcoin, joining us after this. We may have a couple more stories in advance of that, But don't touch that dial. We will be right back here on RoxomTV in just a moment. Stay tuned.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
How about stretch preferred stock on Roxom? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxom gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxom to your clients. Corporate traders, asset managers, old, young, Stretch on Roxom is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
11.5. We are in heaven at 11.5. 11.5%. 11.5%.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5. Get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Welcome back to RoxomTV. Bitcoin is on an absolute tear, crossing $81,000 in the last 24 hours, up to $81,420 right now. And the reasons stacking up behind the move are worth a closer look. Let's start with corporate demand, which is going completely vertical. Companies bought 50,351 Bitcoin in the first quarter of this year, the highest quarterly total ever recorded, which is balance sheet adoption, pulling supply off the market and quietly locking it away. The policy backdrop does appear to finally be turning a bit too. On Polymarket, the odds that the Bitcoin and crypto market structure legislation gets signed into law this year have climbed to 62%, and clearer rules mean institutional capital that's been parked on the sidelines finally has the green light to move, even though that particular Clarity Act does more for crypto and stablecoins, let's say, than it does for Bitcoin. Let's hope they keep the developer protections part of that taken from the BRCA in that legislation. Otherwise, in my mind, it will be an abject failure. But I digress. Zooming out, the macro picture appears to be reinforcing all of this. As Kalshi is saying, quote, our traders forecast U.S. national debt to hit $50 trillion before 2029. That's just wild. And when that's the trajectory of the dollar, scarce assets start looking a whole lot more attractive if they weren't attractive to you enough already. And the institutional case keeps getting sharper by the week. Fidelity Digital Assets says the most important portfolio decision isn't how much Bitcoin to buy, it's going from zero to any. And their data backs it up, showing that even a 1% allocation increased compounded returns by 30%, improved risk-adjusted returns by 20%, and barely moved drawdowns. For corporates, that same 1% allocation more than doubled returns while making the overall portfolio more efficient, which is a kind of math that's quite hard to ignore. Now, Bitcoiners been calling for a supply shock for years now, and this move is starting to look an awful lot like the front edge of it. And this is really I'm just kind of I'm coasting on these vibes right now. The vibes have been very good, at least for Bitcoiners, right? For people who've been paying attention, for folks watching this show who've been following this closely, who've been stacking Bitcoin diligently, dollar cost averaging, who looked at this drawdown that we saw from the all-time highs and didn't panic and didn't sell with their lettuce hands, but instead used it as an opportunity to accumulate more cheap sats. This has been an incredible time. I honestly, and perhaps I was too bullish. I don't know if you can be too bullish on Bitcoin, but perhaps I was, a little bit too bullish, because when we were over 100K, I was thinking, you know what, I missed my chance to buy more under 100K, right? I was honestly a little bit bummed about it. Yeah, the price is pumping great, but I was looking forward. I thought I would have more time under 100K to buy. Turns out it did. Turns out I've had a lot more time than I thought. Turns out we still have time under 100K. And of course, 100K is just a number, right? Measured in any other fiat, and the number is different. But it is a psychological one. And, like it or not, the world does tend to signal around the US dollar. But I think that right now, there's going to be a massive, massive wave of bears going extinct. And Bitcoin tends to do this, right? I haven't been in Bitcoin that long, but what I have seen in this time, I'm not an OG. I guess, give it in 10 years, anybody who's buying Bitcoin right now will be an OG, but I'm not there yet, right? But what I have seen in my relatively short time in Bitcoin is that Bitcoin tends to do what people least expect when they least expect it. And right when the bears really start gloating, right when they really start dancing on Bitcoin's grave yet again, right when everybody is so eager to say it's over this time, and Peter Schiff is coming out of the woodwork saying, I told you so. I mean, he's saying I told you so all the time, but he just gets a little more gleeful about it when Bitcoin is down off of highs. When you see all that happening, and it happens for an extended period, like we've been chopping around and down, we got down to around 60K, I think maybe broke just under 60K, not quite to 58K. So, I feel bad for the 58K gang about that. Maybe we'll get one more chance at it. I don't know. But we've sort of been chop solidating, to use a term that James Checkmate uses quite often. And these chop solidation phases are very, very frustrating for people, because it feels like they're never going to end, right? It feels like if Bitcoin is just crabbing along up and down, and mainly down, and it has a way of shaking out the weak hands. Meanwhile, the strong hands, the hodlers, not hodlers, but say it however you want, like myself, like you guys listening out there right now, you look at these chop solidation phases very differently. You use it as a time to, amp up your DCA, because Bitcoin's down significantly off its all-time highs, right? You know that 4 years, 5 years from now, you're going to look back at this time right now, and you will guaranteed say, wow, I wish I would have bought more. You're not going to be saying to yourself, oh, I wish that I would have bought, at 75K instead of 80K. In 4 or 5 years, that's not going to matter. That is going to be a tiny little rounding error, right? That is going to be inconsequential. What's going to matter is that you bought at all. And I think that this also goes back to this portfolio allocation piece that Fidelity is talking about. I find this data to be so interesting. This idea again, and I'll just say, going from zero to any is what basically they're saying. 1% allocation increased compounded returns by 30%, improved risk-adjusted returns by 20%, and barely moved drawdowns. So I don't know how any logical person can look at that. Now, my portfolio allocation is a heck of a lot more than 1%, right? But I'm not an institutional investor, right? I'm not somebody who is trying to manage all this risk. Yeah, I'm trying to manage some risk, But really, I have a high degree of conviction in Bitcoin, and my allocation supports that. But a 1% allocation, giving you a 30% bump to compounded returns, risk-adjusted returns 20%, not really hurting you on drawdowns, that is just incredible, right? 1%, a little tiny slice of a portfolio in Bitcoin, and you basically get all benefit and no setbacks, right? It's barely moving on the drawdowns. This is huge. And I think that more and more people are very much paying attention to this, right? It's still the one thing that I think is, you can not like it, you can bemoan it, but it is the reality that I think from everyone, all the Bitcoiners that I've talked to, just the sentiment, the vibe in general. I wish that there were more plebs, new Bitcoiners, taking this opportunity to stack their first sats. I wish that there were more people, listening to Bitcoin news programs on Rocks. I'm listening to Bitcoin podcasts like the Bitcoin podcast, mine. I wish there was more of that retail influx right now, because this is the funny thing about human nature, about psychology, is that nobody wants to buy at the times when they really should, right? Like everybody is lining up to buy Bitcoin when it's hitting all-time highs, when it's pumping, when there's a little bit of euphoria, when there's blood in the streets, when the fear and greed index is down low. Nobody seems to want to buy Bitcoin. And that's just, it's such a shame, right? And let me check what the fear and greed is right now. Right now, fear and greed index is at neutral. It is at 50% or 50, on the scale there. Last month it was down at extreme fear, 12, right? Yesterday it was at 40, fear. Last week it was at 33, also fear, a little bit more fear. And this is the interesting thing. Like, people don't want to buy when they're fearful, right? They tend to chase the euphoria. They tend to chase the upswings. And again, I think that even if you bought at 80K versus buying at 125K, still in 4 or 5 years, that's not going to make a big difference whatsoever. But if you have the option to buy more Bitcoin, or to enter the Bitcoin market for the first time, to buy your first sats, well, it's obviously better to do that when Bitcoin is cheaper in US dollar terms, or whatever your fiat is. When you get more sats for your fiat than you did the day, week, month, year before, that's the best time. But nobody wants to. Nobody wants to when Bitcoin is cheap. Nobody wants to buy Bitcoin when they should. They want to buy Bitcoin. I mean, you should always buy Bitcoin, right? Like, there's not a time when you shouldn't buy Bitcoin. But the best times to buy it are always when people are ignoring it the most. And again, I think that's a function of human nature. I think that's a function of human psychology. People are just, they're more reticent, right? They're much more reticent to buy when it seems like things are going bad. But really, for anyone who is paying attention, if you have been buying, if you have been trying to stack, if you've been creating value and converting that value into hard money, Bitcoin, during this whole drawdown period, you're feeling pretty good right now. You're watching, maybe you're like me and you're watching Bitcoin go up a little bit. And you're like, God, maybe just could you stay in the 70K range a little bit longer, maybe stay in the 60Ks a little bit longer. It's a mentality shift though. And it's a mentality shift that takes a while to get to. But I think more and more people are getting there. Right now, a lot of those people happen to be in the institutional side of things. Because as an institutional investor, which again, I am not, but if you're looking at this and you see, a 1% allocation, I get a 30% bump on my compounded returns, I get a risk-adjusted improvement of 20%, and it's not really hurting me on drawdowns, that's just a no-brainer. It's, it's a breach of your fiduciary duty not to take advantage of that. Like, that is just a no-brainer play for you. And you're seeing this more and more. The other extreme, of course, is Michael Saylor and Strategy, who is just buying up a storm. They took a little pause. I think they paused this week. I guarantee that pause won't last very long, right? And it's funny, they take like 1 week break and people are like, oh my gosh, you think something's wrong? Like, no, I don't know, guys. Maybe they just can't buy every single week. I'm not sure. What I do know is that they are well on their way to 1 million coins. It's just mind-blowing. I think they're already over 5% of the total supply. And that's total supply, we're not even talking available supply or the actual float that is out there being traded day to day. So I think right now, if I had to put a little bit of a bow on this before we move on, I would say keep taking this opportunity. Do not take these opportunities to buy Bitcoin, to get many more sats for your dollars. Do not take these opportunities for granted. because, I mean, a lot of us, if you were around and when Bitcoin went, I was buying all the way up to the 2021 top, right? Buying all the way to 69K, thought it was going to, keep on going, and it didn't. It went down into a brutal bear market, corrected down, got all the way down to like 16%. We bobbed around 19K for seemingly forever. We chop solid around 19K forever. So much so, we went up and down across 19 so many times that Carla and I, made a song about it. Well, she made the song. She did the singing. I just kind of helped in the lyrics a little bit because I am not a good singer, guys. But you look back, and at the time, there was a lot of fear. It was a scary time to buy, especially because I was much, much newer into Bitcoin at that time. And I'd just been buying all the way up to the top. And then you see that crash off. You go down into the depths of the bear. The memes are better in the bear market, for one thing. But if you took that opportunity, you felt really good a couple of years after that when you saw Bitcoin. Bitcoin basically, ripped. Once it finally went down to 16, that was kind of the bottom there. Then it just chugged along up, and it kept basically chugging along up until it hit 125. I mean, that's incredible, right? My only regret is not buying more Bitcoin. I should say maybe not having more fiat to buy more Bitcoin at that time. And you don't want to feel that, right? You want to feel that, wow, I went as hard as possible. I converted as much fiat to Bitcoin, or I earned as much Bitcoin. If you're providing value and the person you're providing value to is willing to give you Bitcoin directly, you want to feel coming out of a bear market that, you know what? Wow, I did about as much as I could to try and acquire as much cheap Bitcoin as possible. And again, these events, these chop solidation periods, they feel like they're never ending. And the interesting thing is that, to bring up Checkmate again, because I love this piece of data from him, is that if you miss like it's usually 6 to 10 best days of Bitcoin in a given year, you basically miss out on all the gains for Bitcoin. Like most of the time, Bitcoin is just chop solidating, right? Most of the time, it's maybe a couple points up, a couple points down. Sometimes it's many points down, right? A lot of times it's many points up. But if you miss those 6 to 10 best days of the year, you miss out on basically all the gains. This really goes back to the old adage of it's time in the market, not timing the market, right? And if I'm not a trader, and you guys know this, if you've been listening to this show, to any of my shows, any shows I've been on, I'm not a trader. Sometimes I'll trade a little bit just to remind myself what a terrible trader I am. And it's always a good reminder. And then I'm like, nope, should have just stacked Bitcoin. And this is the interesting thing here, is that so many people are still, when you're still denominating any gains that you make in fiat, when you're still trying to trade and you're denominating things in fiat gains, you're not using Bitcoin as your unit of account, you may think that you're doing well. But if you actually are honest about it, if you compare that to how you would have done by just buying and holding Bitcoin, like that's the actual hurdle rate, right? Are you beating Bitcoin's returns? The picture doesn't look quite so rosy. That's why I think what the parent company of RoxomTV, Roxom, is doing is really interesting. It's, again, I'm not a trader, but I do think it's fascinating that you have an entire market at Roxom that's denominated in Bitcoin. Like that's actually an honest market. It's actually letting you know, if you are a trader, how are you doing versus the only benchmark that matters, the only hurdle rate that matters, which is Bitcoin. Sadly, I think, again, we are still so early, guys. We are still so very early. You go out and if you watch the man on the street interviews that Joe Nakamoto, a fellow Roxom host and podcaster and journalist, will go out and do, he's still running into people that have never even heard of Bitcoin. They still don't even know what it is. I think it's sometimes we're in this bubble where it's easy to forget that not only do so many people still, most people, it feels like most people know about Bitcoin. They've at least heard the word, but there's still people that haven't all over the world. And even of the people who have heard of Bitcoin, most people still associate it with crypto, and okay, or, say, oh, is that the Sam Bankman-Fried thing? I heard that was a scam. And you're like, okay, I don't even know where to begin with this. Or they take the Elizabeth Warren tact and they think that it's, used by criminals and money launderers and da-da-da-da. They don't realize that the US dollar is what criminals prefer. We're still so early. And even out of the people that do acquire their first sats, so many of them end up selling them at a drawdown. They buy at the top and they sell on the way down and they take a loss and they say, I'm out of this. This is a scam. But for those of us who have a little bit of fortitude, these are the times where you have a great opportunity to stack cheap sats. Take that opportunity. You will not regret it 4 or 5 years down the line. And that is the timeline you should be looking at. I fully encourage you to spend Bitcoin in the present, spend and replace. I think it's great to support Bitcoin businesses. I think it's great to use Bitcoin as a medium of exchange. I do it as much as possible. I do it on Nostr every day as well, zapping posts and getting zapped. I do it on Fountain, where you guys will send me sats for streaming my podcast episodes. Thank you to everyone who does that. That's amazing. You're giving me a chunk of absolute scarcity every time you do that, and it's greatly appreciated. But really, I'll leave you with one thing, then we'll maybe go to a quick break, and we'll come back with a couple more stories here. But take the opportunity when you have them. When everybody else is fearful, you should be greedy. Take whatever old adage you want. This is a great time to stack sats. Bitcoin is pumping right now. We're right now $81,311, infinitely printable, Federal Reserve cuckbucks per coin. Won't stay this way forever. We all know what happens here. Bitcoin goes up and to the right forever with volatility. The question is, at what point in that volatile journey up and to the right are you going to stack the most sats? I'm going to keep stacking no matter what. I'm going to keep DCAing because, again, I want to have more time in the market. I'm not going to try to time the market. I'm going to smash buy when I can, when I have some extra fiat. And in the meantime, I'm going to try not to look at the Bitcoin chart too much because I'm not trading it, but I can't help myself sometimes because it is just a fascinating thing to watch. But what I'm going to do is try and spend time with my family. I'm going to try to create value to provide for my family. I'm going to save in the most perfect money that humans have ever discovered, created, whatever you'd like to say, and that's Bitcoin. And I'm going to try to live my life. But hey, to each their own. Maybe you want to trade shitcoins. Maybe you want to stare at 25 different monitors all day long and absolutely waste your life trying to trade these shitcoins while you should have just held Bitcoin and you would have done better at the end of the day anyway. I don't know. Maybe that sounds better to you. Doesn't sound better to me. But okay. With that, guys, we're going to go to a quick commercial break, and then we will be right back with more. I'm waiting to hear when the man, the myth, the legend, the voice of Bitcoin, Guy Swan, will be joining us. Hopefully it'll be soon. It may be getting pushed to the final hour of the show. I will let you guys know as soon as I possibly can. But in the meantime, stay tuned. Don't touch that dial. We will be right back here on RoxomTV with more.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Welcome back to RoxomTV. For the first time since the April ceasefire between the U.S. and Iran, the two militaries exchanged direct fire in the Strait of Hormuz. U.S. officials say American forces sank 7 small Iranian boats and destroyed an Iranian drone during the engagement. This comes as President Trump's Operation Project Freedom, a mission to escort commercial tankers stranded in the Persian Gulf, moved into the strait, and Iran responded by attacking commercial vessels in the area. The administration has been careful to frame it as not a formal naval escort, a distinction that would carry specific legal and military implications. But Iran has flatly rejected that framing as meaningless, saying any U.S. interference in the strait constitutes a ceasefire violation, full stop. Defense Secretary Pete Hegseth went in front of cameras and insisted the ceasefire is not over.
Last 24 hours or so, Iran's fired at us, we fired at Iran. Just going to ask you more directly, is the ceasefire over?
No, the ceasefire is not over. Ultimately, this is a separate and distinct project, and we expected there would be some churn at the beginning, which happened. And we said we would defend and defend aggressively, and we absolutely have. Iran knows that.
But within the same 24 hours, Iran also struck the UAE, launching a total of 4 waves of missiles and drones. The UAE's Fujairah Petroleum Industries Zone was set ablaze. It was targeted because it's the UAE's only remaining crude export outlet and was built precisely to bypass the Strait of Hormuz, making it the last functioning artery for UAE oil exports. And across the globe, drivers are feeling the pain at the pump. U.S. gas prices hit $4.46 a gallon, the highest in nearly 4 years, while Brent crude has been climbing steadily for the past 24 hours. And the forecasts coming out of Wall Street are not exactly going to lift your spirits. Goldman Sachs sees Brent easing to $90 by Q4, but only if the Strait of Hormuz reopens by the end of June, while Citi's base case for Q2 is $110, with a bull case of $150 if the strait stays closed through June. Either way, 2026 is shaping out to be a brutal year for anyone who flies, drives, or buy things that get shipped, which last I checked is pretty much all of us. It is, it is so funny when this sort of political jargon is used, where it's like, guys, it's not a military escort; it's just the military escorting these ships. But it's not a military escort, right? It all seems just almost a little bit. A little bit humorous there, but again, I think that things are likely going to get worse before they get better. I think that things are going to escalate more before they de-escalate. I would love to be proven wrong, but at this rate, I really just don't see the U.S. backing down in any way. I don't see Iran backing down in any meaningful way or offering the sort of concessions that the U.S. is asking for. And ultimately, I think that this just sort of, there's just basically geopolitical chop solidation, to borrow a Bitcoin term there. We're just sort of chop solidating around this. At the end of the chop solidation phase, like with Bitcoin, there's probably going to be a violent move up or down. I don't know what the up or down means in this situation, but it will likely not be pretty. And at the end of the day, these things end up hitting consumers the hardest, right? This is something that is going to continue to be a very big drag on people's budgets. Gas at $4.46 a gallon is no joke. And that's just, basic unleaded. Diesel is even higher than that, significantly higher, last I saw, at least around me locally. So I don't know. I think that this, again, will likely get worse. This will escalate before it de-escalates, but I would love to be proven wrong in this case. But we shall see. We're going to jump into, we're going to have Joe Consorti here coming on for the next hour or half hour of our show. We've got him for a little while. Let me confirm exactly how long. He's going to be coming on with us here in just a few minutes. I think we're going to go ahead and do maybe one more quick story before that. And then we will go ahead and head to a break, bring back in Joe, and get on with it. So next up, the Justin Sun and Trump family World Liberty financial saga has officially graduated from public drama to a full-blown courtroom fight. The World Liberty Fi account on X has come out swinging with a post that read, "Today we are filing a lawsuit against Justin Sun for defamation. Sun has launched a coordinated media smear campaign against World Liberty Financial and refused to stop even when confronted with the truth." World Liberty Fi is claiming that Sun's entity bought tokens back in late 2024 and then later engaged in what they're calling, quote, prohibited transactions, which include transfers to Binance. And they say that's what triggered the freeze in the first place. The company is now arguing that the freeze function was disclosed in the terms from day one, and they're framing this whole situation as a fight to protect the integrity of the project. Sun didn't take more than a few minutes to fire back, writing, quote, "The alleged defamation lawsuit that World Liberty announced on X today is nothing more than a meritless PR stunt. I stand by my actions and look forward to defeating the case in court." So now it's officially lawsuit versus countersuit, narrative versus narrative, and a whole lot of expensive lawyers get even richer. The lawyers always get their piece of the pie. And here's where things get a little bit uncomfortable. because Sun is absolutely not a clean victim in any of this. He's got a long track record of controversy, regulatory scrutiny, and aggressive token plays going back years. And he reportedly spent tens of millions of dollars buying his way into access inside Trump's orbit. So when something like this finally blows up in public, the optics are brutal on every side. Because what you're really watching is insider versus insider and power versus power. But if you zoom out, this story is much bigger than Justin Sun, and it's much bigger than World Liberty Financial. Because what you actually have is a Trump-linked crypto project being publicly accused of freezing and controlling user assets, while regular retail investors are stuck holding positions they can't exit. Bitcoin simply doesn't have this problem because nobody can freeze your coins. There are no admin keys, and there's no governance theater dressed up as decentralization. It's just code and ownership the way it was always supposed to be. When billionaires are suing each other over who gets to control the freeze button, the rest of us are really just watching a live demonstration of exactly why Bitcoin was built in the first place. This story has really been quite interesting to watch play out, and I think it will probably get even more interesting. It's really just a great, it's very emblematic, I would say, of the overall crypto market, right? The crypto market. You've got, again, it's insider versus insider here. You've got this case where you're buying in, to these pre-mined tokens, promises of being able to exit at a certain time, and you didn't do that quite right. Well, we'll just freeze it. Why do we even bother calling it DeFi? Right? Again, let's drop the D, just Fi. It's cleaner and it's more honest. There's nothing decentralized about any of these crypto projects, right? It's not decentralized if somebody can just press the freeze button. If somebody, like in the Arbitrum case, can just go ahead and transfer funds to another wallet after freezing them. There is nothing decentralized about centralized control. It's just patently absurd on its face. But somehow people keep buying it. Honestly, I kind of, there's a little bit of schadenfreude, if I'm saying that correctly, watching some of this stuff happen in the crypto space. I think Bitcoiners have that quite often, where it's we told you. It's kind of this is kind of the problems we've been warning about with all these shitcoins. But again, shitcoins are not going to go away anytime soon. Unfortunately, people will continue to print them. People will continue to get scammed by them. People will continue to affinity scam on the back of Bitcoin. People will continue to find ways to claim that something is decentralized when it is really a dino. It's decentralized in name only. There's nothing decentralized, again, about being able to freeze somebody's coins, somebody's tokens. That's just a centralized fiat financial project that is dressed up as some sort of blockchain innovation, but there's really nothing innovative there about recreating legacy banking just with a couple of more steps and maybe a few fewer employees and a lot more insider printing of worthless tokens. But I digress. We're going to go ahead and go to a quick commercial break here. When we come back, we're going to have Joe CONSORTI joining us. I'm waiting to hear at what time Guy Swan will be hopping on the stream as well. So stay tuned. Do not touch that dial. We'll be right back here on RoxomTV in just a moment with more. Stay tuned.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
No! Bitcoin! Come on, little buddy! Bitcoin! I need you! Don't go!
Welcome back to RoxomTV. My name is Walker America. The price of Bitcoin is 81,303 infinitely printable Federal Reserve notes per coin. And I am pleased to welcome back onto RoxomTV, Joe CONSORTI. Joe, how the heck are you? How you doing?
Pleasure chatting with you. Thank you so much for having me again.
Always a pleasure to chat with you as well. Love to pick your brain. Love the energy that you bring to the Bitcoin conversation. I want to do a little bit of a vibe check to start out with you. Where are you at right now? Bitcoin again is over 81,000. Been on a nice little run since the start of the sparkling conflict, not war, but sparkling conflict in Iran. As other assets have sort of languished a bit, obviously a lot of them went on pretty nice runs while Bitcoin was languishing prior to that. But what's your general kind of gut feeling on the market, vibe check on it? But then also, what are you paying attention to in terms of signal that you're pulling out of the noise, kind of maybe from a more macro perspective?
I really like how you called it sparkling conflict. I'm going to steal.
Only Congress can declare war.
Exactly, right? It's ultimately there are a couple of things. So first and foremost, Bitcoin is the best performing asset since the beginning of the war, and that's not something to take lightly. On-ramp Bitcoin had a great chart showing that Bitcoin is 7 for 7 of the last major geopolitical crises since 2018. And it showed that 7 out of 7 times it was up. And not only was it up more often than the S&P and gold, but it actually outperformed on a percentage basis. So that's a pretty big development. You've got to wonder the institutional capital that's watching that and saying, hey, I thought this was speculative tech. Perhaps this is something else. The more often that Bitcoin behaves this way in the face of crises, the closer we arrive to its correlations eventually shifting. And its correlations, in my mind, are shifting at the margin, away from risk-on speculative tech to something that is a little bit more evergreen, an asset you want in your portfolio in good times or bad. So to put some numbers to the tape here, Bitcoin's up about 30% since the start of the war, which is crazy. It went from about $61,000 to about a high of 82 grand. Now we're about 81,000, which is nuts. It's crazy to say. People point to the S&P 500 and the NASDAQ having a historic rally, and they did 2 weeks ago. In 11 days, they reversed from 8 to 10% down, all the way back up to new all-time highs. It's the fastest stock market rally in not in history, the second fastest in history, the fastest since 1982. So what that tells you is that markets are for a discounting mechanism. They're pricing in an end to the war. Now, that said, there's a caveat. They might be getting over their skis, right? There's a chance that if oil stays where it is right now, above $110 on Brent crude, that we do see demand destruction and we do see a recession. A couple of really crazy data points. Fertilizer exports through the Strait of Hormuz, they used to be exporting about 600,000 tons per week. They've dropped to 0. 75% of farmers in the United States say that they don't have enough fertilizer. That's not good at all, because for those who might be unaware, farmers make our food. So that would not be that's not good at all. You also have wheat futures, they're their highest level since 2024. So all of these things are stacking up. And, to top it all off, right, we didn't see demand destruction back in 2022 when oil reached these levels and stayed there for actually a little while. So 2 or 3 weeks where oil was above 110 and we survived. However, this time it's not a matter of inflation caused by demand necessarily. It's a supply shock. And you can't solve that with interest rates, right? You can't ease your way out of that. You can't create credit out of a situation like this. The only thing you can do is get the spice flowing again. And we're very far away from that. It seems every time there's a resolution announced to the war, another bombing takes place the following morning and oil whipsaws back above $100. So what I'll say here is, what I'm watching is Brent crude oil futures specifically for this summer, so the July contracts and the December contracts. And what I want to see is a reduction in those. I want to see those fall. But unfortunately, the July contracts or the December contracts for Brent still have it at about $91. That's up from last week where they were expected to be about $75 per barrel. And now the crude futures for July are still at $113. So if we remain, so basically markets are saying, hey, we're going to remain where we are through the summer and we're going to decline marginally into the winter and still say 30% above where oil normally is. So what I'm saying here is, if oil prices do not come back down to earth sooner than later, we could be in for a switch reversal in asset prices. But that remains to be seen. I tend to err on the side of the fact that, given the fact that the Trump voters didn't want this war to begin with, he'll do his best to wrap it up soon. If we wrap it up soon, markets will continue rallying. But if they don't, you might see a correlation to one event that makes COVID look like child's play. If oil stays where it is now for a sustained period of time. So that's where we're at now. That's what I'm watching.
There's a lot to unpack there, and that was quite a nice, succinct analysis, as you always bring to the table, Joe. It's really interesting. I would like to see a de-escalation, where they're right. I'd like, it feels like things may get worse before they get better. That neither side, it's not in either of their interest to really back down in this, probably more so in Iran's interest, but they're also, the Iranian regime is very proud, right, and determined not to. And a lot of it comes down to just like saving face, honestly, for them, as we've seen in a lot of past negotiations, right? But I want to key in on a couple of things there, because I think what we're seeing right now, we're obviously seeing prices at the pump are going up, like they're hitting the highest levels in 4 years, right? $4.47 a gallon national average, something like that. That's basic unleaded, not even talking about any of the premiums or diesel or anything. That's like your, just ethanol juiced gasoline. But you mentioned the fertilizer piece as well. And energy, fuel, right, is at the base layer of the economy. It's an input cost for everything. And I think what we're seeing now, like if we haven't even really fully felt the effects of how that's trickling down throughout the broader economy yet. I think we're starting to, but it feels like it hasn't been as bad as it's going to get yet. And I'm just sort of wondering, how bad does it need to get before people really start taking even more issue with the state of things than they already are? Do you know what I mean? It's one of those things where once you stop being able to afford to fill your gas tank and pay for food, and the food's getting more and more expensive from multiple fronts, not only from the transportation side of things, but from the original input side of, hey, we need to fertilize our crops, and that fertilizer is costing us twice as much. All of these things are ultimately passed on to the consumer, right? And so I just, it starts to be one of those situations where it's like, well, thank God for Bitcoin. Thank God, for us that have the opportunity to save, and everyone has it, but only some are taken, to save in a money that is going to protect you from a lot of that geopolitical uncertainty, hedge against that uncertainty. But boy, people have already been financially struggling. You look at some of the data around how many people have, just even like $1,000 in their bank account. It's a shockingly small number of people who have that. People are struggling already, and it just feels like it's going to get worse. Top that on the fact that we're going into a midterm year. Boy, it feels like what I worry about, I guess, let me round this up. This just gets used as arguments by socialists and communists for why we need even more government control and more of this, more of that. I'm wondering what you think the realistic chances are of us being able to de-escalate quickly enough that this doesn't become a massive, massive price shock to people on an ongoing basis. Because we also know that they might be, the Fed's going to be in a pickle too, because Trump wants them to cut rates. They're going to want to cut rates. But if inflation is ripping, their hands are going to be a bit tied there. I'd love your kind of read on that as we go in and kind of tying in the monetary policy side of things, because we see that Warsh is probably coming in. What's your take on that and how it all kind of bleeds together?
Oh yeah, it's a huge story here. I think, and I'll get back to this at the end, but for viewers, just to keep them alive and listening for the explanation, I think that this gives all the more reason politically for Warsh to cut rates, because all the GOP will have left heading into November is asset prices. I've said this before, but price at the pump now is not something that's in their corner, right? When Trump was first elected, everybody was clapping their hands about $2 gasoline. I certainly loved $2 gasoline. It was above $3 for 4 years straight. And then suddenly, you have someone who doesn't care about the ESG garbage getting to office, and it's about $2.20 a gallon nationally. Imagine that. So that was one of the biggest things in Trump's corner. Now you not only have Trump entering into a war, but you also have gasoline prices rising massively. So the only thing they have left is the stock market. So they will do everything in their power to juice it, and I'll get back to that at the end. But one thing that I want viewers to be aware of is that there is a strong negative correlation between gasoline prices and presidential approval. Studies as recently as 2 years ago show that every 10-cent increase in gas prices corresponds to about a 0.65% decline in presidential job approval, and thereby a 0.65% decline in incumbent election odds. So that said, gasoline prices nationwide have increased by about over $1 and a half. So let's say conservatively, Trump's approval rating has dropped by 6.5%. Right, very conservative. That means GOP election odds have dropped by about 6.5%. You look at Polymarket, you look at Kalshi, every single market is saying that the Dems are going to get the House, the Dems are going to get the Senate. That's not good at all, right? I'm quite displeased with the Republicans and the fact that they have a majority, yet rather than ruling and passing the laws that need to be passed, they decide to sit on their hands and do nothing. It's absolutely infuriating. Where the Democrats will take the power they have and they will wield it over you with an iron fist. They'll send you to prison. They'll try to kill you. The Republicans will sit on their hands and say, look at how principled we are, right? It's the most annoying thing ever. Because of the fact that they've done that, now we're in this pickle. I'd say the odds of us getting out of this soon, I can't really put odds on it because it's changing every day. But what I will say is that JP Morgan estimates that global oil inventories are going to reach their what's called an operational stress level for the global economy in early June. So you've got about a month left before things start to get extremely hectic. You see $5 nationwide gasoline. You see a measurable increase in food prices. Again, as you mentioned, not just from the perspective of needing to transport it, but also from the input cost of the fertilizer and your seeds, etc. And then in September, oil is projected, according to JP Morgan, to reach what is called the operational floor level. So basically, like, the world will run out of its baseline level of oil that it needs to function, and you have economic mayhem. You see demand destruction on a level that we've never seen before since the 1970s. Other estimates point it to a little bit earlier. So other estimates say that this could occur as soon as July. That's not good, to say the very least, right? Obviously, we can talk about elections and what it means, for Trump and the Republicans' odds of winning in November. But if this occurs through the summer, if this persists through the summer, we're not talking about elections anymore. We're talking about famine, right? We're talking about people not being able to put food on the table, not because they can't afford it, but because it's not available. We could put the tinfoil hat on and say this is all engineered in order to get us to eat bioengineered, slop and things like that. I won't go there on this show, but ultimately that's sort of what we're facing. If this persists much longer through the summer, it won't be a question of, my party will get elected. It'll be a question of, oh my gosh, I actually can't feed my family. I have to go shoot my neighbor and steal what's in their fridge.
Yeah, what's that old expression? It's like people are 6 missed meals away from revolution. So something to that effect. I forget the exact number of missed meals it is, but it's not many. It's not many. And I'm curious too, just to unpack a little bit what you mentioned about what your prognosis is for Warsh and how he would act as incoming Fed chair. So what I wonder though, I hear you that this is going to be the lever that the Republicans have the ability to pull, but the Fed is supposed to be public-private. It's supposed to be independent, right? Wink, wink, nudge, nudge. Jerome Powell, obviously, Trump is no fan of him, but he held the line seemingly for a while. I'm just curious if, Warsh has made some public statements saying, look, I'm going to maintain independence. I'm going to do this. How much do you buy that? I'm guessing by your statement, you don't buy it that much, but it would be it would be seemingly going against the Fed's mandate if we've got inflation ripping and they're cutting rates, would it not?
It absolutely would be, but ultimately it would be the last thing they have left. And the reason I'm so confident in saying I think Warsh is going to cut rates, number one reason, and this is, before the Iran war, before all of this kicked off, and before really all they had left in their core was asset prices, was because Trump was saying, basically in so many words, that whoever he picked as Fed chair, he wants him to cut rates. And so that's the reason Warsh was picked. Regardless of how bipartisan or neutral we believe him to be, that's the reason he was chosen. And so that's reason number one. But reason number two, it actually goes a little bit deeper. First and foremost, there was a clip of him speaking about the impact of AI on the economy and that it's going to be a massive deflationary force. He said, and I quote, that we are entering into an era of structurally lower prices, structurally falling prices. That's very interesting because in a credit-based system, we know the Fed does not like falling prices. They want to target 2% CPI inflation year after year. And so Warsh is laying the groundwork. He's essentially trial ballooning, cutting rates despite inflation, using AI as a convenient scapegoat. The other scapegoat that he has put forth, so that's reason number two. This is reason number three. The other scapegoat that he has put forth is that the way we measure inflation, and he said this in his Senate testimony, written briefing, or in his written testimony to the Senate, he said that the way we measure inflation is not accurate, but he said the way that you and I think inflation is inaccurate, we say, okay, inflation is actually reported way too low. In reality, price inflation is like 7 or 8% a year. Monetary inflation is like 10% a year. Warsh actually said that inflation is overreported and that it's actually lower than the headline CPI suggests. So basically he's saying, hey guys, inflation is already low. We should cut rates. And funnily enough, the St. Louis Fed actually began reporting the data for Warsh's estimate of inflation that he referenced in his Senate testimony, and lo and behold, it's lower. So now he's laid out these two reasons that the U.S. should cut rates despite high inflation, basically saying, hey, price inflation is actually lower than is reported, and even if it isn't, then AI is going to lower prices anyway, so we should cut rates as soon as I get in May. That's effectively what is being said. And so the fourth reason, right, if all of that wasn't enough, the fourth reason is that, price at the pump matters quite a bit. If we continue to see $5 gasoline throughout the summer without crazy demand destruction and a recession, then Warsh has to cut rates to juice asset prices. However, if we do see demand destruction and a recession as a result of all of this, none of that will matter. We'll have to cut rates because we are in a recession, right? So basically, we're cutting rates regardless of what happens. The question in my mind is whether or not we get balance sheet expansion. I think we will. I just don't think we'll see it as soon as he gets in. We already are seeing balance sheet expansion to the tune of $40 billion a month. So new freshly printed money is being put into the system. But Kevin Warsh has gone on record and said that QE is reverse Robin Hood. It's stealing from the poor to give to the rich. And that sounds good on paper, and that makes Bitcoiners like us cheer. But we know that the math precludes him from being austere at all. And so until I'm proven wrong, everything he says is jawboning. And based on that and the reasons that I just laid out, he's going to cut rates regardless of the state of the economy or the state of inflation.
Okay, I appreciate that analysis a lot because I was actually not aware of that comment that he made about inflation being overreported, which is kind of, do you think that he actually, does he believe what he's selling there? Does he actually, is he smoking his own stash?
Maybe they've got some crazy blackmail on the guy. I don't know, but
that's a wild statement to make. That's a really wild statement. And I don't know. Again, I haven't seen the data that you're referencing, but coming out of the St. Louis Fed, were they trying to make the case, or was Warsh trying to make the case that, okay, we actually are looking at the wrong, we're looking at the wrong things. And if I engineer this basket just so that then was that what it basically is? Creating a new super ultra core inflation, whatever.
Yeah, super duper ultra core inflation, the sequel.
Just remove food, energy, a place to live, a car. Let's just remove everything.
Remove literally everything, inflation. And we have no inflation.
That is a wild statement to make. It just kind of blew my mind with that a little bit. And it is interesting, the case that you lay out, that basically, cutting rates and balance sheet expansion is sort of the only path there, or maybe not necessarily in tandem, but let's see what happens there. I am curious though, because you know that if I mean, it's going to be very interesting. Every party that is currently in power, like, loves it when the Fed juices the economy, right? And the party that's not in power always calls the Fed irresponsible at that time, and that there's not, and it's like back and forth. Boy, the Democrats are really going to run with that if he starts cutting rates amid high inflation. I don't know. It could be a very interesting second half of the presidency for President Trump. Boy,
yeah,
I don't know what to think about that. I'll be honest.
I don't envy the guy, unfortunately. It's like this unfortunate. I voted for him, but this is a situation of his own making, unfortunately, right? Nobody wanted any new war. He ran on that platform. We have new war. Nobody wanted expansion of the balance sheet. We're expanding the balance sheet. Nobody wanted Fed independence to be broken. Fed independence is now broken. The list goes on and on and on. And so, like, it is extremely disappointing. The Democrats are going to use all of this as cannon fodder against him. We might see the pendulum swing back in the other direction, which in my mind would really suck. We talk about socialism and communism. Like, they have done everything but say, like, if we get back in power, we are going to kill you, basically. And so, like, expect trials, expect more politicians being jailed. Like, if they get power again, expect the Zoran Mamdani playbook to be thrown to the entire country, or I suppose the Gavin Newsom playbook, right? Because Zoran Mamdani kind of fell flat on his face. He promised all this communist stuff, and then he ran into a budget issue like immediately, and he realized that communism only works when you can print your currency, right? It doesn't work when you're a state and you can't print money. So expect the Gavin Newsom playbook nationwide. If the Democrats win in November, which they very well might. Not necessarily ideal for the country, but that's why Bitcoin exists, right?
Yeah. The interesting thing about Iran is, I mean, I think people often forget that in the weeks and a month or so leading up to the start of let's say military activities there with Israel and the U.S. Starting to launch attacks, there were massive nationwide protests. Like, the people of Iran were out in the streets. The Iranian regime was killing a lot of protesters. Like, it would. I mean, you would have thought that maybe if Trump would have phrased this as, I'm going in there as a humanitarian mission. They're killing protest. Like, there. It seems like there were probably a lot of better ways to phrase.
It could have made his approval rating go up. Yeah.
But obviously his hand was, I think, a little bit forced by Israel's actions. Who knows there? But it almost feels like Iran was at a tipping point where it may have eaten itself from the inside out, and now even though you've decapitated a lot of the regime there, you've got them now digging in their heels a little bit, and have a lot more kind of, let's say, clearance to crack down on anyone who is protesting that regime, because it's wartime efforts now. Like, now all bets are off, all semblances of not that they had any freedoms over there before, especially for women, but now any semblance of that, I think, is pretty much gone. But
now they have plausible justification for it. Yeah.
That's the sad thing. It's like, citizens don't wage war against each other, right? The nation states wage war against each other. Citizens on both sides tend to pay the consequences. And I think that we're seeing one other thing I want to talk to you about before we go to a break here in a moment is on sort of the tariff side of things. We saw that Trump there's new tariffs coming out between the U.S. And the EU. Basically, they bumped it up to like 25% now. I'm just curious of your read on it, and maybe more broadly your perspective on tariffs from sort of a free market perspective. I tend to, I understand the desire to make sure we're not getting shafted by other countries in trade deals, but also, as somebody, anybody who's running a business knows this. If you're moving goods in and out of the country, like, you pass those costs on to your end customer. Like, the end customer ends up paying the price in most of these cases. And I'm curious of your read on this, because the tariff saga has been also ongoing, right? Back and forth, up and down across for, well over a year now. What's your general position on it? And just I don't know if you have any specific thoughts on the recent round of things, but I'd love your read on that.
For sure. Ultimately, I would prefer tariffs if they were an alternative to income tax instead of in addition to income tax, right? The income tax was supposed to be something that was temporary in order to fund the war effort. Now it's permanent. Now I give 5% of my income to the state of Massachusetts for what? I don't know. For fraud, I suppose, like their fraud budget to get Maura Healey a new Mercedes Benz. I don't know. But it's like if they were at the expense of, if they were an alternative to income tax, I wouldn't mind them, right? But because they're in addition to, it's not ideal for me. So the new round of tariffs, it's a universal across the board 15% tariff instead of the reciprocal tariffs that we had before. And that's in effect until July. And then the EU one specifically, I believe, was on cars and trucks. Those are going to rise to 25% this week. Look, I think that, again, like it all boils down to me, like if we can fund the government through tariffs and eliminate the income tax, that would be wonderful. I think we should fund ourselves entirely or exclusively through sales tax and a small property tax as well, right? If you choose to consume, paying tax on that makes sense. A property tax also makes sense to some degree until a certain point in order to incentivize people downsizing so new families can get into neighborhoods, things like that. I've changed my view on property tax a bit as I've come closer to potentially homeownership, and I'm sure they'll continue to evolve over time. And I think we could do away with the income tax entirely. But as far as, the impact on markets is concerned, I think they've come around to be very comfortable with tariffs, right? We saw the initial tariff tantrum back in April. Everything fell. That was another one of the crises that Bitcoin responded exceedingly positively to, and it did very well following it. And since then, every new major announcement of tariffs hasn't done much of anything to the market. If there's one thing that I can really credit Trump for now, after he's done all of these really less than ideal things, it's that because he just tweets such crazy things so often and he creates these crazy tariffs so often, the market doesn't care. It's like it's making the market more resilient, if anything, because now when massive geopolitical shakeups occur, Bitcoin goes up 3%, the S&P 500 goes up by a couple of percentage points, right? Whereas, under Biden, if you had these massive tariff regimes be unveiled, you'd probably see a week's long sell-off. So that's one thing that I can credit him for. It's sort of building the market's immune response to geopolitical strife. But as far as tariffs are concerned, not a fan unless they decide to get rid of my income tax.
I like that perspective as building up the market's immune response, because it is true. It's like he says so much stuff. It's like the market can't react to everything. They just kind of get desensitized to it. I don't know if that's a good or a bad thing. At the end of the day, it is what it is. But yeah, I would agree with you. I mean, I would love to see income tax. I would love to see a lot of our taxes stripped away, right? And I think my views on property taxes have also evolved to the point where that's something that actually should go to funding things in your local community, right? And that's something that kind of makes more sense. At least if we're gonna talk about taxes, like that makes more sense than income, capital gains, certainly than unrealized capital gains. Consumption taxes also are something that makes more sense than either of those aforementioned ones. But unfortunately, it's just like they never seem to take taxes away. They always seem to add them in. And I think that's the rub right there, unfortunately.
Yeah, unfortunately. The rubs you get from the government are always like that, unfortunately. It's really brutal. I mean, like it just makes sense, right? If you create a lot of things, if you are a net value add, then you shouldn't be taxed for those things. If you consume, then you should be taxed for those things. If you're the beneficiary of your school district or your police department or your fire department, you should be taxed for those things. But I don't want to be taxed on my income. I don't want to be taxed on what I'm creating. It's a wild world. Once I'm emperor, I will make all of those changes.
I love it. I love it. We're going to take a quick commercial break here, Joe, and then we will be right back in a moment with more. I've got a few other things I want to pick your brain on while I've got you here. So, folks, stay tuned. We'll be right back here on RoxomTV in just a moment with Joe CONSORTI. Do not touch that dial. We'll see you in just a moment.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to RoxomTV. The price of Bitcoin is 81,445 infinitely printable Federal Reserve notes per coin. And Coinbase, speaking of coins, just took a long, hard look at its workforce this week and decided that roughly 700 people were, let's say, surplus to requirements. It's about 14% of the company getting shown the door. CEO Brian Armstrong told employees, and I quote, "We're currently in a down market and need to adjust our structure." But here's the thing. This is not just a layoff story. It's also a full corporate makeover because Coinbase is flattening its entire structure to be a maximum of 5 management layers and rebuilding around smaller AI native teams, including something they're calling one-person pods, where AI agents handle the engineering and product work that used to take an entire team of humans. And to be clear, Coinbase isn't broke. Their treasury looks like it's in pretty good shape. This is a company choosing to reposition itself for stablecoins, prediction markets, and the AI era rather than waiting around to be forced into it later. Wall Street predictably is eating it up with a spoon. Coinbase is trading around $203, up over 6% on the day, adding nearly $12 a share, with investors reading this as a confident reset rather than a panic move. And Coinbase is hardly alone in this dance. Meta, Amazon, Oracle, and Salesforce have all trimmed headcount in recent months while shoveling money into AI like it is going out of style. The pattern is everywhere now. Cut the humans, deploy the algorithms, scale your output with fewer people, and let the markets reward you for your efficiency. That's the new playbook for tech, and it's quietly shaping what the next phase of these industries is going to actually look like. I want to bring in Joe CONSORTI here back with us on the show. Joe, I'd love your read on this because we were just talking off camera for a second about how these crypto casino companies all seemingly pivoted towards adding prediction markets around the same time. I mean, prediction markets were blowing up. It looks to me like this is sort of a silent, tacit admission that the crypto scam has really it's been running its course for a little too long. Maybe they're trying to reposition. Clearly, they're cutting headcount. They're trying to stay ahead of these things, especially the publicly traded ones. What's your read on all of this? I mean, is this just being prudent on Coinbase's side? Is this part of this pivot, really to AI and all of this, or I should say prediction markets and all this? Is that indicative that, maybe the jig is up a little bit and they're realizing they can't fleece investors so much? What's your take on this whole situation? I think it was 40 if I'm remembering correctly.
But also, the other side of the coin, which is very real, which is that AI is scaling human productivity massively. Massively. It's making one individual just as capable as a full team of people, as a full team of 2 or 3 people. That said, I think these companies are going to run into a bit of a wall in terms of what they can produce. Because the thing that AI cannot have, which is in the head of a lot of employees, tried and true, tenured employees at these companies, is tribal knowledge, specialized knowledge. You can train an agent to do certain things, But beyond a certain point, you need a human behind the wheel, right? So in my mind, these companies are sort of going about it wrong. But then again, I'm not a public company CEO, so we'll have to wait and see the results of their actions in sort of flattening their workforce, having a reliance on AI agents. I think AI should be leveraged in the opposite direction, which is that rather than cutting your workforce to maintain the same level of productivity with humans plus agents, you increase your productivity by adding AI into the mix, right? Without having to hire new people. And then as you hire new people, every new hire you have is 3 people, right? So I think that these initial furloughs are just a function of cutting the froth, and then eventually, inevitably, these companies will expand, right? I don't think this is sort of the beginning of what will become a massive culling of white collar jobs, and then we get UBI. I think it's just a rejiggering of where those jobs sit. People might be out of work for a while, but at the individual level, productivity will increase. And then paradoxically, just as happened for every productivity revolution throughout history, despite productivity increasing, fewer humans being needed for a job, more jobs will be created. Right. So I think we're in phase 1 right now where a lot of panic is occurring, but we're not moving toward a UBI future. We're moving toward a future of extreme abundance where people are employed, yet they're also infinitely more productive.
It is a funny thing. We humans are sometimes goldfish in our memories because, in every technological revolution, of course, there are many jobs that are lost, right? The automobile replaced a lot of horses and the buggies and the drivers and, whole industries that made those. Electric lights. Wow, we don't need as much, whale oil, right? And all these things.
Yeah, right.
Sure, things are always going away. And yes, one can make the argument that, okay, well, maybe this time is different because AI is like moving at a speed we're not really used to, et cetera, whatever you want to say. But humans are very creative, and it seems that they're one door closes, another one opens. I think in every technological revolution, I think that I agree with you that will be the same here. I agree that we will move into a sort of more abundant future. The real question, this goes back to sort of what you mentioned earlier and part of Jeff Booth's sort of central thesis around the price of tomorrow, is that idea that, okay, well, there is a disconnect though between having a credit-based monetary system that always needs to be inflating and inflating and inflating, and this hyper deflationary natural state of technology. Technology makes everything cheaper all the time. A lot of those gains have just not been able to accrue to people because of all of the money printing. And I'm curious if you see AI as being kind of one piece of this potential, does this end in the dismantling of the fiat system as we know it today because it's simply, nothing stops this train, right? They have fiscal dominance is real. They have to keep just even, meeting entitlements and all these things. And at the same time, they can't stop printing, plain and simple. Like the system will collapse if they don't keep expanding it. Does AI sort of light even more of a fire under that? Is it more of a catalyst that'll accelerate that? Or does the fiat system end up adapting and still eke its way on for the foreseeable future?
Right. So I think it's the latter and then the former. I made a video about this. Pretty funny. I did an A/B test. One of the titles was AI will replace you, it won't replace Bitcoin. That one didn't win, unfortunately. But a video about why AI is the apex, or Bitcoin is the apex asset for the AI era. And basically, I talked about this from 2 fronts. Number one, it's massively deflationary. And so as a result of it being massively deflationary, to the point we discussed earlier about Kevin Warsh justifying cutting rates and money printing because of AI's deflation, that's what's invariably going to happen, whether it's later this month when Warsh gets confirmed or a year from now. You're going to see AI deflation, Jeff Booth's thesis, and you're going to see a massive amount of money printing in order to maintain that 2% CPI inflation target. And so your purchasing power is going to get absolutely just destroyed, right? Bitcoin will go up parabolically as a result of that. I hardly ever use that word, but you have this exponential function on one side. Therefore, the Fed needs to print at an exponentially faster rate. Therefore, Bitcoin has a very real chance of having that parabola, that God candle that Sam Samao has always been talking about. We got the first reverse God candle 3 months ago. Bitcoin fell $10,000 in a day. So hopefully we'll get the real one soon. But anyway, so that's impact number one, why Bitcoin is sort of the asset for the AI era. You have extreme deflation on one side and inflationary monetary response as a result, and Bitcoin being the best recipient of that globally. Number two, you have software modes collapsing. So I talked about how every app right now is becoming the same: prediction market, gambling, casino, whatever. But more realistically, like apps of the past, like Chegg, that's a great example. It's the one I cited in the video. Great study notes app, great Cliff Notes app, helps you with tests and answers, and I used it to cheat my way through college. Its moat completely got destroyed by ChatGPT, right? Because you can ask this thing for free and it's infinitely more helpful, if not just as helpful as Chegg. And so it went from a $15 billion company to a $100 million company, more than 90% decline. And that's going to happen a whole lot more. And where do you think that capital is going to go once people sell Chegg? Well, are they going to buy other software companies? No, they're going to buy two things. And this is what I broke it down to in the video. They're going to buy the disruptors and the assets that cannot be disrupted, right? So they are going to buy the NVIDIAs of the world, the AMDs of the world, the Apples of the world, the Googles of the world, what have you, the Metas. And they're going to buy the assets that cannot be disrupted, right? They're going to sell the disrupted, and they're going to buy the disruptors and the assets that can't be disrupted, like Bitcoin, like gold, other assets with very high stock to flow ratios. And so those are the two reasons that Bitcoin is sort of the asset that's purpose built for the AI era. I don't, it ultimately, like to your question, the fiat system's response will have to be a massive amount of money printing to offset prices falling. But can you still hear me okay? I hit my microphone. Okay, perfect. Mic's still working. But as a result of that, it'll sort of help the system chug right along for a time, right? For a time. But if AI is as deflationary as we believe it to be, and it's not just hype, and it doesn't seem like it's just hype. I've integrated it into my workflows. I'm massively more productive than I was previously. I haven't turned into an unproductive, brainless lemming as a result of using this thing every day. I think there's real legs to it. I don't think it's a bubble. These companies have real revenues behind them. They might be trading at crazy valuations, but even still, there's real exponential revenue growth here. I don't think this is a bubble. I don't think it's going away. I think this is a serious contender for dethroning and dismantling the credit-based fiat system as we know it, but it's going to fight like hell in order to stay alive. And so lots of money printing on the other side of this thing. If the economic necessity and the fiscal necessity for cutting rates and printing money wasn't enough, now you have a massively disinflationary and deflationary technological force on the other side of this thing. So Bitcoin is perfectly poised for both of those fronts to be the biggest beneficiary of it. And I'm very excited. I for one, unfortunately, do not own any Bitcoin. I lost all of it in the boating accident last weekend. But if I did own any Bitcoin, that would be the asset that would perform the best.
I'm so sorry to hear about that accident. I also had a similar one recently. It's amazing how many boats are they are dangerous. Let's just say that. You got to be very careful out there. I appreciate that perspective, and it does actually tie in well with our next story on the AI front and sort of how the legacy butts up against the novel. Treasury Secretary Scott Bessent, he went on Fox News this weekend with a warning that should make every bank executive sweat. He said artificial intelligence is becoming a genuine threat to the banking system. Let's take a look.
You called a meeting. Some people said it was an emergency meeting to talk about the banks and AI after a breach of Anthropic. What can you tell us about this issue? Is this a systemic issue? Should we be worried about AI hacking our bank accounts?
You should, Maria. And the U.S. government has gotten involved. The AI companies, they are working with us. What we've had in the past month was a step change in the power of one large language model, but we're going to see it from the other AI companies. And it's important, Maria, that the U.S. stays ahead here. Imagine if China or some non-state actor were ahead of us. So what we are determined to do is work with our AI companies to allow them to continue innovate, but our charge to the U.S. government is maintaining safety. And there is a very important calculus here between innovation and safety. And at the U.S. government, we're going to make sure that things stay safe. Chair Powell and I called the bank executives into town. It was a little less dramatic than it seemed at the time because they were already in D.C. So we got them in person rather than convening a call later in the week. And the banks are working on their resiliency, and the U.S. government is working side by side with everyone. And again, very, very important for the U.S. to continue to dominate here, set the global standard, and maintain our lead.
What he didn't say on air is what's already happening behind closed doors. U.S. officials and major banks have quietly shifted into full response mode. Regulators, the Federal Reserve, and the country's top financial institutions are coordinating directly, focusing on resiliency, system upgrades, and real time defenses as AI capabilities accelerate faster than any of them expected. The trigger seems to be a recent leap in large language model performance, what officials are calling a step change. A jump like that doesn't just make chatbots a little bit smarter, it dramatically increases the ability to exploit systems faster, automate attacks, and scale them across the globe in seconds. This isn't about isolated fraud anymore. It's about whether core financial infrastructure can survive machine speed attacks. Banks are now building AI driven defenses to fight AI driven threats, which is essentially an arms race happening inside the financial system itself. And policymakers are trying to thread the needle between innovation and security, as he said, while making sure the US doesn't fall behind geopolitical rivals in AI development. Because if they fall behind, the risk isn't just a hack here and there, it is systemic. Joe, I'd like to bring you back on here and get your take on this because it feels like we're going to see, again, the chatbots and everything, it's all very fun, right? It's all fun and games until some big bank gets hacked, right? I mean, do you think that whenever the government throws out words like, well, we got to balance the safety of it, I get a little flag goes up in my brain. But it does seem here, this is a case where, boy, it makes you glad to have Bitcoin in cold storage at times when your bank account is not looking like the safest place. But what's your read?
Certainly, I definitely agree. And I made a face when he had said that, we need to make sure that people are safe. I'm like, oh, interesting. Where have I heard that before? But, ultimately, I think that the biggest risk factors for individuals as far as their finances are concerned with AI is not their Bitcoin. It's with their bank accounts, right? That are totally unencrypted. They're sitting there. And there's no verifiable way of proving that you own something when there's somebody who can perfectly fake your identification, perfectly fake your face, perfectly fake your voice over the phone. In a very digital world where you now have these tools from deep fakes to being able to replicate voices to being able to do any number of things. Generate images. You can pass through video verification very easily. You can pass through ID verification very easily. All of those KYC measures are sort of butt kiss in a world where all of this stuff can be generated on demand. So funds are at risk, right? To say the very least. I'm not saying that there's an imminent threat to your funds in your bank account. Obviously, up to $250,000, it is FDIC insured. But that said, it's still not ideal to have that amount of money stolen from your bank account. And this, again, it seems that moving into this era of artificial intelligence, we talked about the deflationary impacts, and so Bitcoin becomes a great asset to hold from a fiscal and monetary perspective because the amount of money printing they're going to be doing. But also from an ownership perspective, Bitcoin in the AI era is a way of proving it's an asset that has verifiable ownership. As we move into an era where verifiability is less and less widespread, it's more difficult to verify ownership. But with Bitcoin, it's very easy. So to me, this is just another feather in Bitcoin's cap, and it's just absolutely delightful to see. Right? People will, and it's great because people will. People come to Bitcoin for many different reasons. I came to Bitcoin for number go up. I stayed for the freedom tech and the number go up, and the macro behind all of it. People who are not in the West come to Bitcoin for the ownership, the property rights that they don't have. And I think, it's not something that we've needed in the West, right? Like we have our bank accounts, that's safe. I have my house, that's safe. But what happens when, instantaneously your bank account can be drained by an AI impersonator who calls the customer support line at 3 a.m., right? All of a sudden, property rights, verifiable property, matters a whole lot more. So perhaps in the West, that will be an orange pill reason that we have not needed for a very long time. It remains to be seen.
It is going to be really interesting. I think that piece about actual ownership and property is kind of the crucial piece here, because you may say, well, it's a fiat banking system. They can just reverse stuff and it just numbers in a database anyway. So if something gets screwed, they'll fix it. But the point is maybe they will, or maybe it takes them years to do so because, they're trying to run through it because you passed all the automated checks, right? You passed all the automated checks and somehow it got drained. For all the bank knows, it was you who did it, right? And the level of deep fakes that are able to be created now so quickly, like that is really, I mean, I think it's breaking people's brains, and I think it is breaking a lot of our contemporary models for security as well. Like, no, it's not enough to have a voice call verification or a video call verification. Like, none of these things are enough anymore. None of these things can really be meaningfully trusted. And I just feel like, yeah, it's like we have AI defenses against AI attackers, but it's like right now the asymmetry seems to be on the attack side versus the defense. I don't know what maybe that we reach an equilibrium there, but what are your thoughts on that? That's the way it feels. That's like gut feelings, that it feels like it's easier to be an attacker using AI right now than to be a defender, just because people's mental defenses aren't even there yet to acknowledge that threat. Do you know what I mean?
Absolutely. I mean, and this is why Anthropic is not releasing Claude Mythos, and they're working behind the scenes with a bunch of ISPs and the government in order to make sure that they have protections in place for when they release this brand new model that they have, because it's supposedly that powerful. We're at the point where, these companies are voluntarily withholding new developments because they believe that it'll be catastrophic for humanity if they release it. That's pretty crazy. And also, like, it kind of plays into what John McAfee said years ago, where, through the tequila and bourbon that he had drank for breakfast, he was saying that, like, your antivirus doesn't mean anything. Like, it's actually completely useless. You can hack into machines so easily now and backdoor things, and antivirus, and even top of the line antivirus systems will never be able to be aware of it. Now imagine that cranked up to like 100, right? That's sort of what artificial intelligence opens the gateway for. And that's before even talking about, as you mentioned, our human defenses, our intuition. I'm very glad that I was an internet native kid, and I'm internet native now, and you're internet native as well, Walker. But like, my mother sees a video of 20 bunnies jumping on a trampoline that was clearly generated with, some AI. And she goes, Joe, look at how cute this video is. And I go, Mom, that's AI. She goes, no, but look it's bunnies. Imagine if that was a video she saw of me asking her for money, asking her for $10,000, or some other loved one that she knew asking her for money, or asking her for what the bank account password was, or calling her. Ultimately, we're entering into a world where people need to be more vigilant than ever. They need to have their guard up more than ever, because the ability to impersonate is so sophisticated. And historically, like, we as human beings, unless you know what to look out for, do not have our defenses up for this. So on both fronts, it's time to be extremely vigilant and aware. And again, it's like, this is why Bitcoin self-custody is so important, because you never know. Someone may call Coinbase customer support, perfectly impersonating your voice. They may have some of your information. They may be able to use your phone. They may SIM swap you, and then poof, all of your Bitcoin is gone like that. So it might seem a little bit strange to tie all of this back into Bitcoin, but ultimately it really does all tie back into Bitcoin.
Yeah, no, it is kind of amazing. Bitcoin is somehow perfectly suited for this era in which we find ourselves, even though it was, created at a time before, this stuff was so ubiquitous, right? But it really, boy, it makes you appreciate either the foresight or maybe the dumb luck, I'm not sure, of Satoshi. But it certainly feels a lot like foresight a lot of the time. Joe, I want to check with you. Do you have a hard stop here at the top of the hour? Can you bleed over a little?
No, you bleed over a little.
Okay, fantastic. In that case, then we'll cut to a quick commercial break. We'll come back. We'll bleed over just a little bit of your time, and then we'll go ahead and read you out there after. Want to tap on maybe one or two more things with you, if that's all right.
Absolutely.
Perfect. Okay, guys, we're going to hit a quick commercial break. We'll be right back. We get the pleasure of Joe Consorti's company for just a little bit longer, so stay tuned. Don't touch that dial. We'll be right back here on RoxomTV.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Imagine a constant Bitcoin cash flow. How about earning BTC every 2 weeks? Now you can buy Strive and Stretch on Roxom and stack Bitcoin every 2 weeks. That's the Bitcoin paycheck.
Bitcoin is 81,522 infinitely printable Federal Reserve notes per coin. Got Joe Consorti with us here for a couple more minutes. And Joe, to sort of wrap this up, I want to get your perspective. Just we've talked a lot about how Bitcoin is kind of made for this moment in which we find ourselves from so many different angles, whether it be geopolitical uncertainty, the ownership it allows that is not subject to the whims of AI attacks in the same way that the banking system is, all these different things. And I'm kind of curious of your perspective on, okay, we've been chop solidating. We've had a nice run, as you said, best performing asset, since the start of the conflict in Iran. What's your prognosis, your outlook for sort of the short term? The next year, do we hit new all time highs, for example, in these next 12 months? And then, zooming out from the high time preference, low time preference side, where do you think, how fast does this thing accelerate in the next 5-10 years, given the institutional adoption that we're seeing, but also hopefully with a massive flood of retail that finally starts to wake up, if they ever do?
Absolutely. That's a good question. I think over the next 3 months in particular, it will be really important for Bitcoin, for the war to definitively wrap. So not putting boots on the ground, no more strikes, Strait of Hormuz opening. I believe that's what Bitcoin is pricing in right now. It's what equities are pricing in right now as well. They're pricing in optimism. And should that occur, I think we see a new all-time high in 2026, right? The next 2 to 3 months will be critical to watch. Watch for yields coming back down. Watch for oil coming back down below 100, ideally below 80 and then 70. Should that not occur, I would expect at some point in the next 3 months for there to be a correlation to one event where everything sells off and it makes COVID look like child's play, right? So those are the two sort of scenarios playing out in my mind right now. On a long enough time horizon, we're talking 5 years, it really doesn't matter what happens over the next year. If the conflict resolves peacefully, Bitcoin marches higher. If the conflict does not resolve peacefully and we see a massive demand destruction recession across the world and everything sells off, number one, Bitcoin will be the first to recover and the fastest to recover, like I mentioned earlier, as it has been for the last 7 major geopolitical and economic crises in the country over the last 8 years. So in either situation, Bitcoin winds up over a 5-year time frame, well above $250,000. I think, close to $500,000 in my mind, conservatively. And so, putting that into perspective, it makes today's price action, whether this is a bear market relief rally or whether it's a bull market reversal, into perspective, right? Whether you're going to be buying Bitcoin at 80 grand, or if we go back down to the lows, 55 or 60 grand over the next couple of months, it honestly will not matter once we are, 5-6 years out and we're at $500,000 a coin.
I'm with you on that. I think that perspective is so important, especially for people, if you are listening to this and you've stumbled across this and you are not a holder of Bitcoin yet and you're debating getting your first sats. It's like, boy, you go out on a long enough time horizon, any buying you do in the past looks really good, right? You go back to the bear market of 2022, coming off those, the brutal crash off those all-time highs of 69K, all the way down to the depths of 16. You got it anywhere in that low range, anywhere, near the bottom of that bear bounce. And boy, you feel pretty good right now, right? Mm-hmm. This is always sort of the case. And it's like, yeah, guys, I don't know how much more we can say it as Bitcoiners, but you should really be, stacking sats while everybody else is fearful, right? Like, fear and greed index went to neutral. It's been in fear and extreme fear for the past couple of months. We're back into neutral. Clearly, sentiment is shifting a bit. But something I was talking about earlier on the program is just human psychology, human nature. Sadly, Joe, people don't want to buy when Bitcoin is cheap in fiat terms. They want to buy when it's ripping, when it's euphoric. And I don't know if you and I aren't going to change human nature, unfortunately. But at least hopefully we can prod some people in the right direction, because it is in hindsight, it's obvious, right? It's obvious that whatever the price movements were 5 years ago were a bit of a rounding error, right? As we go forward. And boy, just look at Michael Saylor alone, the amount of Bitcoin that guy is snapping up. It's like, what do you think he might know that you don't? Do you think there might be a little information asymmetry there? This is the thing that blows my mind. And maybe the last thing I would ask on is just if you think, this is a more specific question, but if you think that there is a winner take all or winner take most situation in Bitcoin treasury companies, or if, yeah, there's plenty of fiat to go around. Saylor is going to be the biggest, but many of them will flourish. Maybe if I could get your take on that before we close out with you.
For sure. Yeah, I think, winner take most is sort of the approach with treasury companies, because initially the idea was that, okay, there's going to be like one major treasury company per jurisdiction. I don't necessarily buy that. I think it's sort of a little bit different. Like, it boils down to the team behind it and the financial engineering that they can execute. Day after day, strategy continues to bring on a really great team. Rohan Harani, the guy behind Bitcoin Quant, just got hired a couple of days ago by them. They've got Chaitanya, they've got Ella Huff, they've got a bunch of really, really bright people on their team. So it's really about talent, and then obviously the speed and execution and what sort of financial instruments you can create. So I think strategy has a comfortable lead. They'll stay there. I think you're going to continue seeing a lot of pain and weakness in the United States among some of the smaller players, and globally as well, right? You're going to continue to see treasuries wind down and sell off their holdings. We saw Sequans do that. We've seen Nakamoto sell some of their BTC as well. I think Strive is also a really great number two. They've got a great team over there: Matt Cole, Jeff Walton, Ben Workman, Joe Burnett, and the bunch. So I think it will be a winner take most approach as far as treasuries are concerned. And really what it boils down to is your team's acumen, your execution speed, and then also the sorts of instruments that you can create, and also how you can market them, right? And I think the people who put themselves out there and target larger pools of risk capital will be the winners. They'll be the ones that succeed. So I think Saylor's up there number one. Strive is going to maintain a pretty comfy number two. And I'm keeping my eye on Metaplanet as well over in Japan. And once Dylan and the team over there and Phil and all of them launch their preferred stocks, I think that'll be a great story as well. So to sum it up, I think consolidation and winner take most is sort of what's going to happen over there.
I'm with you on that. Last question, I swear, but just related. What's your read on Stretch? Because I've seen a lot of people, let's say a lot of Bitcoiners, looking at this and saying that they're not fans of it. That this, what people should just buy regular, good old fashioned Bitcoin. It's like, yeah, I agree with that, but also, different products for different types of people, right? I don't know. I'd love your perspective on it, just on how you're looking at Stretch specifically, because it's gotten a ton of attention, rightly so.
Mm-hmm. Yeah, for sure. So different products for different people, right? I'm a big proponent of Stretch, but I don't own any, right? Because it's not for me. I'm not in the fixed income phase of my life. I'm in the growth phase of my life. I'm halfway through my 20s, and we're entering into an extremely accelerating inflationary environment. I'm not putting my money in fixed income. It's not for me, but it is for other people, right? So ultimately, I'm a big proponent of it. A lot of the risks are overblown. The way that I summarize it is that strategy is doing with Stretch what the entire global financial system is doing to buy assets anyways, which is a carry trade. They're borrowing at a low interest rate to invest in an asset yielding a higher interest rate. If you had the ability to do that forever without ever paying down your principal, you would. I would. Right? That's literally it's what they're doing, right? And the systemic risks associated with Stretch, barring corporate risk, the only major risk is Bitcoin going to zero, or Bitcoin underperforming and staying flat for like 50, 60 years. So in other words, the systemic risks to Stretch are the systemic risks to just holding spot Bitcoin. So that's my take on it. I did a full breakdown and a video on it on my YouTube channel, debunking CoffeeZilla's video on it. Hugely overblown. Like, the people calling it a Ponzi are financially illiterate, to say the least. Of course, there are risks, as there are risks with anything. There are more risks associated with Stretch than Bitcoin, just by virtue of it being an instrument issued by a company rather than a decentralized instrument like Bitcoin. But beyond that, there's no hidden text. There's no Ponzi scheme. There's nothing like that occurring. And that's sort of my 2 cents on it.
I appreciate the perspective very much. And with that, you mentioned your YouTube channel. Where do you want to send people? Where can people find more of the work that you do? Really appreciate you taking the time with us here today. I know people love when we have you on the show, so great to have you back. And yes, send people wherever they can find you.
Absolutely. Well, thanks, Walker, for having me on. Always a pleasure to chat with you. And if you want to find more of my work and support me, if you're watching this on Twitter, just go to @JoeConsorti, click on the link in my bio. That'll take you to my website, which is my YouTube channel. You can book one-on-one calls with me as well and sign up for my newsletter, which I'll be launching very soon. Or if you're watching this on YouTube, just search Joe Consorti in the bar above you and click on the first result and hit subscribe.
All right. Joe, thank you so much for joining us here today. It was a pleasure to pick your brain. Love getting your perspective. Do encourage people to go follow you, subscribe, check out the work that you do. You always bring a lot of signal to a noisy world, so thank you. And folks, we've got still a little bit of time left. We've got almost an hour left of our 3-hour marathon here, so we're going to take another quick break here, and then we'll be back in just a moment with more Bitcoin and world news here on RoxomTV. Don't touch that dial. We'll see you in a sec.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Welcome back to RoxomTV. The price of Bitcoin is $81,476. And a viral claim linking Senator Elizabeth Warren, our favorite pro-Bitcoin, just kidding, Senator, to Spirit Airlines is making the rounds online, and it's not true. So let's get ahead of that before it becomes the thing your Uncle Jeff won't stop talking about. The Post alleges that Warren sold airline stock before Spirit announced it was going out of business, implying she had inside knowledge of the collapse and cashed out. Now, fact checkers at Snopes looked into it and found no evidence to support that claim. The rumor originated with this image stating that Warren, quote, sold 20,000 shares of Spirit Airlines 2 weeks ago. What many didn't notice, though, was the logo in the bottom right corner of the image, which contained the word satire. The original image comes from a Facebook page called America Loves Liberty with a bio that reads in part, "Nothing on this page is real." The rumor also got traction as many are blaming Senator Elizabeth Warren for the collapse of Spirit Airlines. They argue that efforts to block a proposed merger between Spirit and JetBlue by Warren and antitrust regulators removed the airline's best chance at survival and ultimately led to fewer options for travelers and the loss of a major low-cost carrier. Spirit recently shut down operations after years of financial struggles, rising fuel costs, and a failed bailout effort. And whether the merger block accelerated that ending is a fair question. And this is, I think you've probably been following this saga with Elizabeth Warren, and this is really just classic Warren, right? Initially claiming that, well, she is blocking this, and the Biden admin is blocking this, and this is a win for the Biden admin to block this merger. Because if they merge, it would result in higher prices for consumers and less competition. Of course, ironically, the government meddling did the exact opposite of what they intended, right? So now Spirit is shut down. Thousands of people are out of jobs. A major low-cost air carrier is no longer operating at all, which means lots of flights are now gone, less options for consumers, more and higher costs for consumers. And again, thousands of people out of a job, a company no longer existing when they were ready to be merged with another air carrier. And this is just sort of a tale as old as government when it comes to these things. Regulators and policymakers trying to do something that they, Elizabeth Warren she's always crusading for the little guy, right? And but for some reason she's, in bed with the biggest banks and they donate the most money to her. But she likes to claim that she's always in it for the little guy, protecting the consumers, protecting the little people out there. But in reality, so much of it is just political theater, for one, and just blatantly illogical on the second part. She's been one of the most vocal anti-Bitcoin people, the most vocal anti-Bitcoin policymakers out there. She is, the polar opposite of someone like Senator Lummis, who's been so vocally pro-Bitcoin and pro-freedom. Elizabeth Warren is decidedly the opposite of that. She also has just a horrific track record in terms of passing any legislation at all. I think she's only maybe co-authored one bill. It might even be 0 bills. I need a fact check on that, that have actually been passed into law. So she's just incredibly, incredibly ineffective, for one. But she is effective, apparently, at getting businesses to shut down by blocking merger options. Now, I could see perhaps a better case for, okay, you want to block a merger between United and Delta or something like that. But we're talking about, low-cost airlines here. This isn't you can't claim that this is a monopoly situation because there are a bunch of other airlines still out there. If this was the last 2 airlines consolidating into one, okay, maybe you could make a better argument then. But really, more monopolistic practices and massive, massive moats around businesses in terms of compliance exist because of government. That's why things tend to consolidate so much. In a free market, businesses are allowed to fail, and they should fail if they're not profitable. So should banks. But the banks got bailed out after the 2008 crisis. Banks are apparently, they were so important that they couldn't be allowed to fail. The free market couldn't be allowed to do its thing. And what this does is because they put so many burdensome regulations on every single industry. You see this right now with AI as well. The biggest corporations want more regulation because it increases their regulatory moat. That's why you always see them very solemnly, the AI executive solemnly and sternly, Sam Bankman-Fried, geez, Sam Altman, excuse me there, woo, little slip. Sam Altman, in front of lawmakers saying, we need to be more responsible regulation. And come on, regulate us. We want to be regulated, right? And the reality is that they want that because it increases their moat. It increases their regulatory moat. It increases the cost of compliance for any business that's trying to be a startup and compete with the big boys, right? And so paradoxically, more regulation just ends up creating more monopolistic practices that wouldn't actually exist in a free market. They'd be forced to actually compete more. That would drive prices down for consumers. But instead, because it requires so much capital, just to pay for the compliance that is required with government regulations, that these regulations end up just choking and snuffing out smaller companies, right? And this is, I think, what you're seeing here. And again, this is a really, really classic Elizabeth Warren move, just blatantly cheering on and boasting about the fact that she got this deal blocked. And then a couple of years later, when they go bankrupt, she's saying, she made another post recently just saying, it's not true that this was, isn't my fault, basically. And it's like, people can read, Senator Warren. People can read, even if perhaps a lot of your voters can't. Up next, Kraken is teaming up with MoneyGram to let users withdraw crypto as physical cash in more than 100 countries. Here's how it works. Kraken customers convert their crypto balances into fiat, get a reference code, walk into a MoneyGram location, and pick up cash, often within minutes, with no bank account required at any point in the process. This is a distribution play, plain and simple. MoneyGram already built one of the largest global cash networks on the planet, and Kraken just plugged directly into it, instantly expanding its off-ramp capabilities into regions where banking access is limited, but cash infrastructure is everywhere you look. Now, the obvious target here is remittances, where cross-border payments in the fiat system are still painfully slow and outrageously expensive, especially in developing markets. This setup does let people move value digitally and settle in local cash almost instantly. But, the bigger story here is the access. It gives people what they need in the moment. They need to pay rent or, buy groceries, handle an emergency. Cash does still matter in a lot of places. And a digital balance that they have difficulty spending doesn't help them as much. But at the same time, it creates a bridge between two worlds. Lets users move assets between, digital assets and physical cash a lot more seamlessly. I am very curious, though, how much of a cut they are taking. I know that MoneyGram's fees are have historically been quite high. I think this is also the bigger story here is just that this is a capitulation moment, really. It's a key, player in the legacy fiat system, literally talking about physical cash here, acknowledging that Bitcoin and quote crypto and stable coins, right, is eating their lunch. Because let's be frank about this. Nobody wants to pay massive fees, and I'm going to try to pull up what the pre-existing fees are for MoneyGram, and then what the existing fees are for MoneyGram with this new move. But I would guess that they're still taking a bit of an arm and a leg, perhaps. But you've got to meet people where they are, not necessarily where you want them to be. We are seeing stablecoin usage across the developing world far outstrip usage rates in the so-called developed world, right? In economies where they have even worse fiat currencies than the US dollar, turns out people really like dollars. And I know it's very easy to say, well, they should just use Bitcoin instead. And that's fine. Maybe they should. But right now they want to use dollars. And we did a couple of stories on Tether and what they're doing with Bitcoin, turning on this Bitcoin faucet. We covered that a bit last week. And again, I do believe that stable coins, whatever you may think of them, they are a bit of a bridge to Bitcoin. They do get people more comfortable with interacting with with crypto, quote, in a more, let's say, just becomes part of how they do business, right? How they move money. Now, again, the important thing to note here is that if you're working with Kraken and MoneyGram, nothing against either of these two businesses, but if you are working with them, obviously there are still people involved in that process. That is a centralized process that can absolutely be stopped, frozen, confiscated, whatever it may be. If you really need to move money and do it without permission, Bitcoin is the only way to do that. You can't do that with stable coins either. Stable coins are very convenient, no doubt about that. They provide a great service for people all over the world. Not denying that at all. People want to use them. That's why they are so damn popular. That's why Tether is so damn profitable. But, and Tether will be the first to acknowledge this, they can obviously freeze it. It's not permissionless, right? And if you want to be able to transfer value in a permissionless way without reliance on a trusted or untrusted third party, Bitcoin is your only real option there. It's the only real option. And I think there is a growing acknowledgement of this. I think as people start to pay more attention, and stablecoins are getting a lot of attention right now, and rightly so. Again, they are a massive upgrade on the fiat system, in the sense that, okay, in traditional banking rails, you're at the mercy of the bank's operating hours, right? And bank holidays and all of these ridiculous things where, it's difficult. It makes it more difficult to move money, right? Stable coins, 24/7, 365, heck of a lot faster, lower fees, objectively better, except they're not stable, right? They're, as Jeff Booth would say, they're guaranteed loss coins, because they're tied to the US dollar, which is, of course, losing value constantly. So stablecoins provide a great permissioned medium of exchange. That's undeniably true. And they do provide a great permissioned store of value to people who have even worse fiat currencies than the US dollar, right? The US dollar, the dollar's the worst, except for all the rest. The dollar's the skinniest kid at fat camp, the prettiest horse at the glue factory, whatever else. You've heard me say it many times. I'll keep saying it again until I am blue in the face. But again, the key word there in both those cases is permissioned. And that is the beauty of Bitcoin, that if you want to move money permissionlessly, you use Bitcoin. You can, and now with all of the development that is going on layer 2s, it's not just Lightning anymore. You've got Liquid, you've got Spark, you've got all these emergent layer 2s that are really excellent and becoming more interoperable. And I think a lot of the wallet UX that is being worked on right now, in terms Aqua Wallet comes to mind as a great example of this, where you're able to so easily swap in between, USDT and Bitcoin layer 1 and Bitcoin on Lightning, Bitcoin on Liquid, USDT on Liquid. That's a fantastic user experience. It's a really great user experience to be able to do all of that in one app instantly. That's really powerful. And there are trade-offs with all these, right? Lightning has trade-offs to layer 1 Bitcoin. If you want very, very fast settlement, if you want lightning fast payments, use a layer 2, right? Use Lightning, use Liquid, use Arc, whatever, Spark, whatever it may be. If you want the absolute security, uncensorability, unconfiscatability of the base layer Bitcoin, well, you use base layer Bitcoin. It's going to be a little slower, but that a few blocks confirm and you are good to go, and nobody is reversing that. That once 6 blocks are out of there, then you're really nobody's winding that back, right? And so everything has trade-offs here. So and back to the original story, I do think it is very interesting to see MoneyGram sort of bend the knee a little bit to the crypto side of things, just because it's an acknowledgement that, like, look, if our business model doesn't evolve, it is going to die. And I think that they realize that. So I am curious. I'm going to have to dig into exactly what they are charging in fees for that, because I would be curious, and if they've actually decreased their fees since teaming up with Kraken, or if their fees are still exorbitant. It remains to be seen. But again, if you want a permissionless way to do remittances, the best way out there is still Bitcoin. We're going to take a quick break here. And then when we come back, you've got me for another 30 minutes here on RoxomTV. So stay tuned. Don't touch that dial. We'll be back with more Bitcoin and world news after the break.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
No! Bitcoin! Come on, little buddy! Bitcoin! I need you! Don't go!
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
How about stretch preferred stock on Roxom? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxom gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxom to your clients. Corporate traders, asset managers, old, young, Stretch on Roxom is for everyone.
Now that's a birthday gift. 11.5%.
in Bitcoin. 11.5. We are in heaven at 11.5. 11.5%. 11.5%.
Welcome back to RoxomTV. My name is Walker America, and the price of Bitcoin is 81,547 infinitely printable Federal Reserve notes per coin. Canada has decided that the answer to financial crime is fewer Bitcoin ATMs. The government has introduced new legislation to create a financial crimes agency after a public inquiry found Canada didn't actually have a coordinated strategy for fighting money laundering, which I guess is a wild thing to learn about a G7 country in 2026, because boy, do the rest of them sure love fighting money laundering, unless, of course, it's the people in power laundering the money. As part of the crackdown, officials are zeroing in on Bitcoin and crypto ATMs, claiming they've become a primary method for scammers to defraud victims and move illicit cash into the financial system. And Canada has nearly 4,000 of these machines, one of the highest concentrations per capita in the entire world. The numbers behind the crackdown are real. Government data shows that more than 2.4 billion Canadian dollars has been lost to fraud since 2022. Officials estimate that only 5 to 10% of cases ever get reported, meaning the actual figure could be dramatically higher. The hardest hit are older Canadians, often pressured into dumping cash into these machines after a phone call from someone pretending to be a cop or a tax official. So the concern is legitimate. People are getting hurt through this fraud, but here's the part that doesn't get talked about. Bitcoin ATM transactions can carry a fee of 10 to 20% or more, making them one of the most expensive ways to buy Bitcoin in existence. If every one of these machines disappears tomorrow, Canadians will still have plenty of ways to buy Bitcoin through regulated exchanges and peer-to-peer markets. Bitcoin doesn't go away. The access points just evolve. It's easy to ban a machine on a stream corridor, but you cannot ban the network behind it. And an important note on this too, in terms of the fraud data, is that, of course, this is not specifically just related to Bitcoin, right? I think that one thing that gets lost every time the government starts talking about this. I had a conversation with well, it wasn't much of a conversation. It almost turned into a senator more shouting at me when I was on Capitol Hill for the Bitcoin Policy Summit last year, and was asking a senator, a couple of senators there who were doing a meet and greet, very nice of them to share their time with, the people who pay their salaries, but was asking them just about, their stance on Bitcoin, if their stance had evolved. It was Senator Dick Durbin. He had previously co-authored letters with Elizabeth Warren saying all of these, just repeating basically Elizabeth Warren's talking points about how awful Bitcoin is. And one of the things that he focused on specifically, and I was asking if his position had evolved. He was warning people in the depths of the bear market in 2022, actually, that along with Elizabeth Warren, that Bitcoin was too volatile. Everybody was going to lose all their money, et cetera, usual doomerism. And I just brought up kindly to him that, since then, Bitcoin has, increased many multiples in value in US dollar terms. Has your thinking on Bitcoin evolved at all in terms of, your theory being disproven about Bitcoin? Well, he didn't answer the question, and he didn't seem to like that. And he started to raise his voice and shout at me a bit. And out of nowhere, this octogenarian, this old, perhaps partially senile man, starts just yelling at me about Bitcoin and crypto ATM scams, and starts saying, you guys need to clean up your act. And I'm looking around, I'm like, sir, I don't represent the entire Bitcoin and crypto industry, right? And also the fraud that exists, which is not new because of Bitcoin. It's existed for a long time. Sort of scams and things like that. That is not something that Bitcoiners in any way condone. That's a terrible thing, but it happens far more within the fiat system, right? This is not something, it's not like fraud and scams got invented when Bitcoin came around, right? And this is something that politicians love to try and point out, that, well, look, there's scams in this industry. It's like, of course, there's scams in every industry. I mean, there's also, major banks who laundered money for Jeffrey Epstein. But you're not shutting down the whole banking industry. Maybe you should. Okay, anyway. But this is the point. This stuff gets thrown around as though it's a problem that is unique to Bitcoin and crypto. Now, crypto, there's a whole different layer of scams, right? But people getting scammed through Bitcoin ATMs has nothing to do with Bitcoin with the Bitcoin network. This senator also brought up Sam Bankman-Fried and all these other things. I looked up, it turns out, Sam Bankman-Fried had also donated his campaign a few years back, but hey, who's counting, right? Basically bringing up all these completely irrelevant things in order to just deny that he could have possibly been wrong about this nascent monetary technology. And with regard to these ATMs, this really is less. I think it's less about, they're not actually that concerned about stopping fraud, right? If they were like, okay, that's you can try to claim that you're interested in stopping fraud, and it's Bitcoin and crypto causing this fraud with these ATMs. But again, the reality is that the majority of fraud and scams use the existing fiat rails, right? This is really about making sure people don't have convenient on and off ramps. And granted, these machines, these ATMs, take quite a fee, certainly. So definitely not the best way to acquire them. And I need to check if in Canada you can still use a Bitcoin ATM without an ID. Maybe somebody on the team can check that data point for me. But again, for some reason, anything involving Bitcoin ends up just getting attacked, right? We've seen anything that involves adding a layer of privacy to people's transactions, such as buying or selling Bitcoin for cash, or buying it for cash or selling it for cash at an ATM, adding a layer of privacy. Because let's be honest, the best way to hide money is with cash, right? And granted, if you know the right bankers, you can use that cash digitally. That's fine. Like if you go to JP Morgan Chase, for example, and you're Jeffrey Epstein, that's fine. They'll do it for you. But for the average person, cash is still king. Cash is actually, I'm a fan. I'm no fan of fiat. I am a fan of using cash whenever I get the chance, right? Because cash is truly untraceable. That is the beauty of cash, right? But these sorts of scams. This reminds me of the Ian Freeman case. And for anyone who's not aware, he's a libertarian activist, radio host of Free Talk Live, bunch of other stuff. But he was convicted in federal court for operating an unlicensed money transmitter business using Bitcoin ATMs, kiosks, etc. And they threw some other charges at him too. I'm not as intimately familiar with his case as I am with the Samurai developers case, but they charged him, I believe, also with, again, it was the unlicensed money transmitter one, which they love, also conspiracy to operate one and operating one, I guess, conspiracy to commit money laundering, tax evasion, and a couple other things that they threw out at him. And basically, the authorities were alleging that he laundered over $10 million in proceeds from various scams and frauds by converting victims' funds to Bitcoin. And they said he's catering to scammers, all these things, and he didn't register with FinCEN. All the usual things. A lot of parallels to the Samurai case. Obviously, a little bit different because we're talking about open source software versus physical ATMs. But the supporters of Freeman is very much still a Bitcoin prisoner and has been for a while, as are the Samurai developers, and they should all be freed. I hope President Trump does give him full and unconditional pardons. But really, Freeman didn't scam anyone. There, were screening processes too that stopped some of these frauds. Obviously, he was unaware of most, or all of these scams. There's only like a percent of thousands and thousands of transactions. And this is really just a case of, again, government overreach against Bitcoin and privacy advocates. And another case of archaic fiat laws being applied to Bitcoin. He wasn't involved directly in any scams, right? But they're arguing that, well, you were a money transmitter, you facilitated this scam because you were running an ATM. It's like, okay, if I go to, if somebody goes to a Chase ATM and they withdraw cash, and then they go and and buy a gun and shoot somebody with it, or they go and is JP Morgan Chase responsible for that person's death? Of course not, right? They're responsible for laundering money for Jeffrey Epstein, but that's a different story. They're not responsible for what somebody does with the money that they get from an ATM. Equally, if somebody goes, you go and buy drugs with cash that you withdrew from a Chase ATM and you overdose, is Chase responsible for that person's death? If somebody goes and gets scammed and sends cash via the mail to the scammer, right? And they got it from a Chase ATM. Is Chase responsible for that scam? No, of course not. Again, they're responsible for laundering money for Jeffrey Epstein, for which they paid a very large fine. Okay. Point being, this is the same thing that we're talking about here with ATMs. And this brings it back to the, wanted to bring up the Ian Freeman case because I think it paints a little bit, it adds a little bit of context to this. And this is obviously in the US. But he was sentenced to, I think, 8 years, 8 years in prison, bunch of fines, a bunch of, apparently he was supposed to pay restitution to victims, like millions of dollars worth. I know that there's, he appealed. I think he appealed last year, but that's he hasn't been freed yet. Like he is still in federal prison, which is honestly that is a crime that he's still in federal prison. But you start to see the pattern here, right? And same with Canada. It's like, okay, the ATMs are being blamed for the fraud that occurs. Again, like it's not the gun that kills someone, right? It's the person using that weapon. It's not the ATM that scams someone. It's the person who is scamming the people. Like, this is just really basic stuff. And again, it's a case where the same set, a similar set of laws are applied from the fiat world, where they maybe make some sense, but are incredibly ineffective, to the new Bitcoin world, where these laws are the laws are still not ineffective, right? But they do end up with innocent people who are just trying to operate Bitcoin businesses going to jail, serving time in federal prison, being ripped away from their families. And that is the problem here. And what you're seeing in Canada right now with this new basically crackdown on they're saying it's the primary method or a primary method for scammers to defraud victims and move illicit cash into the financial system, right? But with a lot of these scams, it's people that are buying Bitcoin or some other crypto with one of these ATMs and then sending that to the scammer, right? It's not the old lady that has a wallet full of Bitcoin that she's then taking out cash and giving to them. So the argument even that it's moving illicit cash into the financial system is kind of just inaccurate too. It's moving cash into the crypto ecosystem. And yet nobody wants to see old ladies get scammed, right? Nobody wants that. But this already exists. It's already widespread, right? And cracking down on the Bitcoin side of this isn't going to solve that problem. It's not going to make the fraud and the scams go away. It's just a crackdown, again, as we see time and time again, by overzealous governments on their people when they try to, when they want to use a technology or a service that is in any way privacy preserving. And, Canada doesn't exactly have the greatest record in terms of their financial system and how they wield it as a weapon. We all remember the Canadian trucker protests. And then, famously, after all those truckers got their bank accounts shut down for peacefully protesting in the totalitarian state of Canada, what did they use to get around that? Well, they used Bitcoin. And the government hates that. Governments around the world hate that. And the reality, again, is that AML, KYC, anti-money laundering, know your customer, it just doesn't work. It stops a fraction of the illicit funds that move through the financial system, just in the fiat system alone. Also, the amount of illicit finance that happens in the fiat system versus in the Bitcoin system, it's orders of magnitude. It's like, 99 point something percent versus a very tiny percent, which is executed in, Bitcoin and crypto, right? And so this all just really comes down to overzealous governments who want to crack down on any semblance that any ability that their citizens have to be able to transact privately. And also, you know what the next step is, of course, and this is why many countries have been piloting CBDCs. And thankfully, there's a lot of pushback against that in America, rightly so, and we should continue to. But this is why they're piloting CBDCs. They want to get rid of cash. You've already seen laws go into effect in different places, Europe as an example, about not being able to have too much cash or withdraw too much cash. Like this is the move, because cash is still really good if you want to you want to pay somebody and you don't want the government to know about it. And the government doesn't need to know everything you do. The government actually has no right to know everything you do. We have every right to know everything our governments are doing because we pay their salaries. It's our hard work that goes into feeding these parasites, right? So we have every right to know everything that the government does. They have no right to know everything that we do. We must defend our privacy if we expect to have any. And that's why I will once again remind people, go to billandkeone.org, sign that petition. I'm checking on the other website. There's one that I believe Angela McArdle may have put together. Let me see. I believe it's cryptoprisoners.com, which has different information on Roman Storm, Ian Freeman, Roman Sterlingov, the Samurai Wallet developers, and some others. If you want to educate yourself a little bit more on these cases and really see, what the government did here, and start to ask the questions about why. And I do encourage you to continue making your voices heard with this. It may not seem like it makes a difference, but enough public pressure genuinely does move the needle. Ross Ulbricht was pardoned. That was, kudos to everybody who worked so hard to make that happen. And, he deserved to be free, right? These other Bitcoin and crypto prisoners, I don't care what blockchain you were developing on. If you're writing open source freedom tech and the government comes after you, that's not okay in my book. I don't care if you're enabling, if you're doing stuff on Solana or Ethereum, doesn't matter to me. The precedent is people who are writing open source code and not handling anyone's money, and it's non-custodial. They should not be thrown in federal prison. They should not be taken away from their families. That is wrong. And when it happens in America, which it has with these cases, that is fundamentally anti-American. To be anti-privacy is to be anti-American, in my humble opinion. Because in America, we have the right to just be left alone. It's kind of the whole reason that America started, was we want to be left alone from our former colonizers, or I should say the former, as a former colony of Great Britain. But this really do encourage people to check out these stories, educate yourself on this stuff, and pay attention when you see stories like this Canadian Bitcoin ATM. Go a layer deeper and figure out what this is really about at the end of the day. We'll go on to maybe a little bit more of a hopeful story here, which is just generally about where Bitcoin is at right now, because it is on quite a tear. It's crossing $81,000 in the last 24 hours. Right now, sitting at $81,659, infinitely printable Federal Reserve notes, excuse me. And the reasons that are stacking up behind this move are worth taking a closer look. You heard from Joe Consorti earlier, some of his outlook on where we are, where this is going. But, let's start with corporate demand here. It's gone very much vertical. Companies bought 50,351 Bitcoin in the first quarter of this year. It was the highest quarterly total ever recorded, which is balance sheet adoption pulling supply off the market and quietly locking it away. And the policy backdrop does appear to be turning too. On Polymarket, the odds that the Bitcoin and crypto market structure legislation gets signed into law this year have climbed to 62%. And clear rules do mean institutional capital that's been parked on the sidelines finally has the green light to move. I'd also encourage people to look into that bill, because the part that really matters to Bitcoiners is part of what was taken from the Blockchain Regulatory Certainty Act, the BRCA, and put in there about open source software developers who do not handle and custody customer funds not being treated as unlicensed money transmitters, which is what you have in all of these Bitcoin and crypto prisoner cases. So I do encourage you to look into that a little bit. Zooming out, though, the macro picture is also reinforcing this. Kalshi is saying, quote, our traders forecast U.S. national debt to hit $50 trillion before 2029. And when that's the trajectory of the dollar, scarce assets obviously start looking a whole lot more attractive if they were not looking attractive to you enough already. The institutional case just keeps getting sharper by the week. Fidelity Digital Assets says the most important portfolio decision is not how much Bitcoin to buy. It's going from zero to any, getting off zero. And their data backs it up, showing that even a 1% allocation increased compounded returns by 30%, improved risk-adjusted returns by 20%, and barely moved drawdowns. For corporates, that same 1% allocation more than doubled returns while making the overall portfolio more efficient, which is the kind of math that is hard to ignore. Bitcoiners have been calling for a supply shock for years now, this move is starting to look an awful lot like the front edge of it. And again, I want to double tap back on this piece from Fidelity because I think this is such an important one. And, you know, I'm of two minds on this, right? Obviously, I like more to see individual adoption, right? My fellow plebs finally deciding to get off of zero, right? But institutional adoption does matter too, and it's happening whether you like it or not, right? And the fact is that all of these things are good for Bitcoin. It's good to have Fidelity, and Fidelity, to their credit, has been Fidelity CEO Abigail Johnson, I believe, she was mining, famously mining Bitcoin in her office years and years ago, before many of us were even paying attention to it, right? They've been keyed in on this for a long time. They've been vocal Bitcoin proponents for a long time. And it may be a shock to some people, but it turns out that a lot of folks will take their financial advice from someone like Fidelity and not necessarily from Bitcoin podcasters like myself. Go figure, right? But again, this idea that even a 1% allocation, a tiny little slice of your overall pie, increased compounded returns by 30%, improved risk-adjusted returns by 20%, and didn't really affect the drawdowns, that is massive. And it's similar to when Larry Fink at BlackRock, who was no fan of Bitcoin for multiple years, very publicly speaking out against it, right? Completely did a 180, understood that one, maybe he had some, there was some information that he didn't have, right? There's some sort of information asymmetry there that he needed to correct. And also realized there was money to be made off it. And he was right. It was their most successful ETF launch ever at BlackRock. And again, this is not something that you, like, no one's forcing you to buy a Bitcoin ETF. Nobody's forcing you to buy Bitcoin treasury companies. You don't need to do any of that. You can just hold Bitcoin, buy Bitcoin, spot Bitcoin, hold it in self-custody. Even better, earn Bitcoin for performing a service or for selling goods and get that stuff directly, right? That's even better. Don't use the fiat rails at all. But as I always say, if you can't open a PDF, buy the Bitcoin ETF, right? Different products, different solutions for different people. You do have to meet people where they are, not where you want them to be. And I think ultimately, again, all of this is good for Bitcoin. This is still just increasing awareness because, again, a lot of people are going to take more heed of what Larry Fink says than of what Walker America says. I won't hold it against him, right? Different people, and the beauty of Bitcoin too is when you hold Bitcoin, and I'm forgetting who originally said this, but everyone is working in service of you, right? Everyone is working in service of you. Everyone becomes Bitcoin's marketing department. Larry Fink works for Bitcoin's marketing department, right? Pro bono. I work for Bitcoin's marketing department, right? All of us, anyone who holds Bitcoin, and any of these institutional players who are speaking positively, Fidelity is Bitcoin's marketing department. They are all helping us shift the Overton window. And also, I can understand absolutely the hesitancy to see Bitcoin get more ingrained within the existing system, right? Through ETFs, through whatever vehicle it may be, through corporate treasuries, whatever. I can understand being skeptical. I can understand, kind of looking both ways at this, trying to figure out what's going on here. There's some sort of risk associated with this? But at the end of the day, the more institutional adoption that Bitcoin has, especially in the United States, the harder it is for anybody to come at Bitcoin. It becomes much less politically palatable and acceptable for someone like Elizabeth Warren to keep attacking Bitcoin when the likes of BlackRock really love Bitcoin now. That becomes a lot harder. It becomes a lot harder to attack Bitcoin when many companies in the S&P 500 start having Bitcoin on their balance sheet, right? It becomes really difficult to attack Bitcoin when a huge percentage of your population owns it, whether through spot Bitcoin held in cold storage, which is obviously the best, or through a Bitcoin ETF, or through some other sort of proxy exposure. It gets much harder to attack Bitcoin when there is more institutional adoption. And it used to be the institution trying to be one of the key, the institutions were the ones attacking Bitcoin, right? You still see that somewhat on the bank side of things. But when it comes to the big asset managers, they're starting to embrace it, and they move a lot of money around. People and politicians listen to what they have to say. This creates more of a protective moat for Bitcoin. Now, you can also say, rightly so, Bitcoin doesn't need any of this. Bitcoin doesn't need any institutional adoption, doesn't need political adoption, doesn't need political permission or anyone's permission to exist and to work. Correct. Absolutely 100% correct. That's what makes Bitcoin so powerful. But if you could either have institutions and politicians who are favorable towards Bitcoin, who like Bitcoin, maybe who hold Bitcoin themselves, I will take that over people who are openly antagonistic toward Bitcoin. I will take a bunch of Senator Lummises over a bunch of Senator Elizabeth Warrens every day of the week and twice on Sunday. I don't think that I would have trouble. If you disagree, let me know in the comments, right? But seriously, think about it. What would you rather have? Would you rather have a government, governmental and a corporate landscape that is openly embracing Bitcoin, that is making money off of their Bitcoin products? You don't have to buy them. Some people will, though. Some people want to put their money in a Bitcoin ETF, and that's okay. Let people do it. Not everybody is going to self-custody Bitcoin. It's not even possible for everyone on the planet to self-custody Bitcoin, to have their own UTXO. It's just not going to work out, right? And also, a lot of people are not equipped to. Like we hear about, like, the thing about Bitcoin is holding in self-custody is a superpower, but it's also a risk. You can make mistakes. Absolutely, you can. And many mistakes have been made. Many Bitcoin have been lost. This is undeniably true. Self-custodied Bitcoin is not for everyone, but it is for anyone who's willing to take the ownership themselves, to learn, to take the responsibility. But we just live in a time where people are not used to taking responsibility. They're used to abdicating responsibility. They would rather have somebody else take care of it for them. They'd rather have a customer service number they can call. And that's the thing, while I'm saying all these people are Bitcoin's marketing department, nobody actually, nobody's running Bitcoin, right? Well, we're all running Bitcoin, but nobody is in charge of Bitcoin. There is no customer support line to call if you screw up your self-custody, if you lose your private keys, right? No one to call, nobody to save you, no bailouts. Bitcoin has no bailouts. Existing financial system, it's bailed out all the time. And if they screw up or you screw up within that system, you probably are going to get bailed out too, right? So that's the thing here. Different products, different services for different people. Meet people where they are, not necessarily where you want them or would like them to be. That's okay, because for the rest of us, for those of us who are deep down the rabbit hole, who understand that self-custody Bitcoin is a superpower, it is an asymmetric advantage, the likes of which we have never seen before. To be able to have something that cannot be confiscated, that cannot be censored, that cannot be manipulated at the monetary supply layer, and that you can send around the world 24/7, 365 without asking anyone's permission, that is a superpower to be able to do that. Holding Bitcoin in an ETF, less so. You get the number go upside of things. You don't get the freedom go upside of things. That's okay, because it's still, as more and more people get exposure to Bitcoin, that still helps the freedom go upside of things for those who choose to use Bitcoin in a freedom maximalizing way. Again, all of this is good for Bitcoin. You don't have to like it. You don't have to engage in it, but you should also be cognizant of the fact that this is what it looks like when Bitcoin succeeds. This is what it looks like because Bitcoin is winning. If Bitcoin was failing, I've said this before and I'll say it again, but if Bitcoin was failing, nobody would care. But it's not. Bitcoin is winning. People want Bitcoin. Governments want Bitcoin. Corporations want Bitcoin. Individuals want Bitcoin. Everybody wants Bitcoin. And everybody needs Bitcoin too. Most of them just don't know it yet. So with that, thank you so much for joining me here today. Again, my name is Walker America. I am here with you every Tuesday from 1 p.m. to 4 p.m. Eastern Standard Time. Make sure to follow me at Walker America, primal.net/Walker to follow me on Noster. You can check out, you'll find my links on all my profiles. If you want to go check out my other work with the Bitcoin podcast, make sure to follow Roxom as well. You can find him tagged in all of my recent posts here. Go just search Roxom on X and you'll find it. And thank you guys so much for sharing your scarce time with me here today. I always appreciate it. Always a pleasure to spend time with you guys on these Tuesdays for these marathon sessions. I will be back with Hank at Roxom on Thursday and Friday as usual this week, so make sure to tune in then. Make sure to also check out all the other great programming we have here on RoxomTV across a bunch of different time zones. We are always covering Bitcoin and world news, trying to bring you the most signal in a noisy world. So Thank you guys. You're now free to touch that dial if you want. Appreciate you all. And until next time, stay free.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.